Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live this Monday morning. Got a lot going on this week. In studio, we have our senior economist, Tracy Shuchart, otherwise known as Shy Girl. Good morning, Shy.
Good morning, guys.
And, look at what Jimmy's got on today. He is coming in hot, man. He's got the NinjaTrader orange shirt on. Our senior market strategist, Jimmy Cagnina. Good morning, Jimmy.
Good morning, folks, down in Naples, Florida. Happy to be here this morning. It's going to be a great week.
It is going to be a great weekend. Good morning, Chad. I saw people in the chat this morning were putting in different places they were from. So you got Tampa Bay, you had, which is obviously pretty close to us. You got Western Australia, Scotland.
Yeah.
We're global, Shy. We're global.
We're global.
We made it.
Yes.
Coming into today, this morning I write my morning note, which is free. I put that out there every day, Monday through Thursday. And, I looked at the market, and it's funny. The first thing that comes to mind this weekend, watching everything, was teeter-totter effect. Extreme bearish, extreme bullish. Everyone's talking about new all-time highs now. When a few weeks ago we're talking about, the market, going to have a 30-plus point percentage correction. We go from these extremes, and nothing like price to change sentiment.
Right.
That's
Helene Meisler's.
Helene Meisler, the best. So, coming into a Monday, I think that's where we're at. I think, eventually with the teeter-totter effect is eventually at some point things balance out and both sides get their feet on the ground. And that's where we've come from. We're coming from one extreme. I think we're now kind of at another extreme. Maybe not yet. It's hard to say because you got PLTR earnings today, probably the most loved stock of the year. I like that stock. I think it's interesting to see how well it's done. It's amazing. And you got FOMC this week. And we'll get into all of that. But this morning, I want to start with oil because oil, I wrote in my note, there's only two reasons really why oil goes down. Is extreme. Not extreme, because let's face it, this is not extreme. It's coming down somewhat rapidly, and it's been in a range. So technically, I think there's some drivers there. But it's because of slowdown or because something's changed in production. What's the news telling us?
So, OPEC had their meeting this weekend, and it was early. It was supposed to be today, actually. And they came out, and they are going to, in June, once again, triple what they had said they were going to output. So it'll be another 411,000 barrels per day. So markets obviously open gap down on that. We have retraced that some of that a bit. I think it was a big market overreaction on that for several reasons. What the main one being that Saudi Arabia is going to be responsible for most of that. And what happens is during the summer, their domestic demand rises because they actually use crude oil for air conditioning. So no matter what, in the summer, their domestic demand increases. So I think that is going to take up a lot of that sort of overproduction. But of course, the market sentiment in the market has already been terrible, but of course that added to downward sentiment in the market. Even though we had some huge things going on in the Middle East that didn't get much coverage in sort of the main publications. Of course, it was all over the Middle East publications, but we had bombing near the Ben Gurion airport in Israel, and most flights have been canceled, at least for the next 2 days. And then subsequently, there were two big bombings in Iran. So a lot of tension still in the Middle East, and something we need to watch out for, particularly as oil traders. So again, we have to, keep an eye on all of these things that could really affect sort of production, because we all know, Iran is producing like 1.5 million barrels a day, and so out on the market, and so anything could happen in that arena. So
yeah. Before we get to Jimmy and get some thoughts on the technical side of things, is the price in oil going lower signaling slowdown in any sense?
I think the markets are afraid of a global slowdown, right? We've seen pressure on these markets. We got down to 55.30. If you remember, 55 is kind of where the line in the sand is for shale producers as far as adding any production and possibly taking some off. So we bounced pretty hard on that. We're back above, 57.35 now. So bounced $2 in the overnight. Markets have been thin in the overnight because China and Hong Kong are closed, and the UK is closed as well. So there is sort of thin trading in those markets, or have been in the overnight.
Jimmy, we'll start with you with oil today. Technically, how's that market looking?
Yeah, I mean, we've got, technically we have a double bottom that we've just breached. I mean, and we have a target wick all the way from April 9th around 55.17 that we've almost tagged again this morning. A little bit of a gap even on the downside today. So we're kind of trading below any normal level of support on the front month in the WTI crude market right now. All the moving averages are falling out of bed, just sloping downward. We're miles away from the most recent VWAP anchor. And, the daily stochastics are, scraping the bottom around 25 right now. So technically speaking, no retracement to the upside, all downside action, double bottom possibly breached. For how long, nobody knows.
Yeah, well, I want to stay with you for a moment, Jimmy, because we could talk about crude oil's weakness, but now gold has found a strong bid again, up $82 this morning, up 2.5%. What are the gold charts saying?
Yeah, I mean, gold has just, exploded above all my regular moving averages. The 8 EMA, my anchored VWAP, the 21 EMA, way above the 50 EMA. Stochastics, again, are approaching, trying to turn around, but kind of stuck right there. So gold's trying to move back into a consolidation range that we saw last week, and we're pretty much there right now. Interestingly enough, I just glanced at the Swissy. The Swissy's also up a little bit, so there might be some kind of risk-off sentiment right now going into FOMC week.
Definitely, and we also have obviously geopolitical tensions, and we also have the dollar down this morning, and so that is also helping that gold move higher.
Yeah, pretty much my entire board is green against the dollar, right? You've got all of the major currencies up. Swissy up the most. Well, Swissy, yeah, pretty much. Yen. The yen is up actually more than them to the dollar. So talk about that for a second, Shai. What are the macro minds looking at coming into today? You got weaker dollar, you got stronger gold, you got weaker crude oil.
Weaker indices, right? Indices are down too. I think, again, I think this is caution ahead of FOMC. You would see, if we do see a cut, we would expect to see the dollar pull back, gold go higher. And so I think this is all kind of either hedging or positioning themselves ahead of whatever could happen in front of FOMC.
Yeah, so preview that for us. What's the market anticipating for Fed this week?
So the market is anticipating mostly a hold, and we have kind of seen this play out in short-term treasuries where, they initially thought that easing would start this May, but that position has kind of reversed course. And so it looks like they're pricing in cuts, but further out into the year. So we'll find out what happens.
Yeah. I'm looking forward to this week being behind us because you got earnings behind us and the Fed. Again, I talk about this teeter-totter effect. You could almost say that same type of thing is happening for oil, where you go from, well, I wouldn't say not really. Oil wasn't really a bullish extreme. But we're getting to the bottom part of where I think sentiment's getting really bearish. And, Helene also told us in a DM that it's getting the most oversold with that negative, or was that?
The DSI, she goes,
Yeah.
the sentiment indicator, right? And so she talked about how the fact that, if it gets into single digits, that's really where you want to kind of be looking long. And it's as of last week, it was at about 10.
Yeah. And so what's interesting is that we're at the edges here, I think, a little bit in a lot of these markets. Less going to be impacted by earnings, obviously. But I mean, go back and look at last week. Some earnings, it did change, obviously, the tone and what happened in equities. And I think that did kind of spill over in what we saw, some selling in gold, and who knows what could happen from there. But ultimately, I think coming into this week, we get the majority of almost all the earnings. Is that right, Shai? After this week, are we
We're pretty much done. There'll be some stragglers, but the bulk, we're 72% done with earnings. So after this week,
yeah,
it'll be almost done. A couple more weeks of stragglers, but
yeah,
the last chunk.
And the FOMC is behind us. Be curious to see what the administration says. Well, depending on what they do this week, it will be. I mean, so again, that's the X factor that we can't control, is what comes out of the administration. But today we actually have somebody who works directly with the Trump administration preview that guest for us a little bit, Shai.
So today we have Ross Kennedy. He's trade advisor to the Trump administration. He's a logistics veteran. He's been in the industry for 20 years. He has direct experience in operating agribusiness, chemical, energy, humanitarian, food, defense, water supply, you name it. So we're going to ask him what is going on in logistics, and are we headed for empty shelves? What is this telling us about the economy?
Yeah, well, that's going to be very interesting to start a Monday off this week with that, some deep inside look into what's happening behind the scenes with stuff. Jimmy, I know we got the Edge report here in just a few minutes. Just wanted your quick thoughts on equities. Overnight you saw some weakness. Was there anything on Friday that potentially triggered us to come in a little bit soft today? You know that the market's been on just this, kind of linear bid for a while. Just curious what your thoughts were coming out of Friday's close from a technical perspective.
Yeah, I mean, right now we're down 43 in the mini S&P. Volume is a little on the light side, 117,000 on the front month. That's kind of my gauge for all the stock index futures right now. A little bit of a pullback. I mean, 43 points isn't that big of a deal anymore. It used to be a huge deal, like, I don't know, last year or the previous 5 years. But, we're just kind of sitting right now. We're kind of I feel like this is a pause before, the storm for Wednesday, if there is going to be a storm on Wednesday. We're above my, let me adjust my anchored VWAP, but we're right at that anchored VWAP, perfect anchored VWAP right now. So we're still elevated above that, which is kind of positive. We're above that 61.8% retracement, kind of positive. Moving average crosses on the upside are still in effect. The only kind of negative thing anyone can say is the stochastics, long-term stochastics is pretty overbought, but it could stay overbought for a long period of time. So I'm not going to lean too heavily on that. Right now, it's just looking like a pause and nothing to worry about.
Yeah, Shai, we have any data today?
Yeah, so it's a light data week except for FOMC. Obviously, this morning at 9:45 a.m., we have S&P Global Services PMI, and then at 10:30 we have ISM Services Index. Not going to be a market mover, but important econ data we'll be looking at to see if we're seeing any weakness in the consumer.
Yeah. PLTR earnings today. I think that stock is probably the most liked that I see on social media. I wonder if it sets any sort of tone for the week, because if that stock continues to do well, I mean, I've learned from watching a lot of these stock traders over the years, if you want to be an outperformer of the indexes, you got to own the outperformers, right? Now, as a futures trader, it's not as important to me, but if you got some of the most favorite stocks doing okay, at least okay, or some that are doing new all-time highs, which is crazy to think that some of these stocks may be doing, PLTR is one of them, what tone does that set to the rest of the market? I think it's, I'll almost take everything else into the equation, out of the equation this week. If some of these earnings come out decent or good, and you see some names creep up higher, it's just a case for me for the Bulls to probably continue on this going forward. This this little run that they've been on. Again, as Jimmy said, they could remain overbought longer than anticipated. I do think. Again, I think that we've gotten a little bit because once I start seeing people talking about all-time highs, It's like, come on. I mean, I'm not saying it can't happen, but let's pump the brakes here. Let's not forget also, it was a 90-day pause. Do we have any resolution? No.
No resolution. And what's interesting is that, of course, Trump came out again, and he said there are going to be some trade deals this week, and he's willing to lower China tariffs. And markets didn't really react to that. They opened, we've been down all night, and he said this on Sunday. So I don't know, maybe markets are starting to think that this may last longer than anticipated.
Well, yeah, I mean, we need closure on some of these. I mean, that's what the bottom line is. I think at this point, again, I go back to, I say this all morning, the teeter-totter effect. We go from extreme bearish to, I wouldn't necessarily say we're extreme bullish, but we're at the highest bullish sentiment I think we've seen in some time. And so when you have that, I always look at it and go, at some point we're going to find a balancing point right now. And some closure will I think, help one way or the other. All right, in just a few minutes, we will have our guest for the morning, which is going to be very exciting. But until then, of course, we have this morning's Edge Report with our guy, Jimmy Cagnina. Jimmy, take it away.
I just wanted to start out with a correlation chart between the S&P, E-mini S&P, and the U.S. Treasury bonds. If you could follow this yellow line, we've had a tremendous turnaround in correlation, right? We were at an unprecedented level of almost 94% positively correlated between the 30-year bonds and the E-mini S&P. And look at this kind of just fall out of bed now. Now we're almost back to normal. We're minus 36, 37%, more textbook, right? That inverse correlation. So things are kind of going back to normal after all of this excitement about trade deals and all that stuff, which still aren't resolved. But right now it's kind of a back to normal with respect to that relationship. So why do I even talk about it? Well, because when I'm looking at, if I'm trading equities, I want to know what the bonds are doing. As Deli pointed out, that's important. I want to know what the notes are doing. So let me just shoot over to the 10-year note real quickly. We're back in this long-term consolidation range between I'm about 110 spot 95 or 0.95, and on the upside 111 in 28-30 seconds. So we're kind of right back in the middle of that sweet spot. And we started in this way back at the end of February. So yeah, we had some attempts to break out to the upside twice, but that failed. There was no continuation buying. So we're kind of stuck back in the middle there. And for some targets here, if you are trading the 10-year note, we do have some great targets. We have a pivot up here on the upside at approximately 111.14.5, and then that Menthor Q high vol level at 111.16.30 seconds. On the downside, we have previous session's lowest as a target, 111.02, and then put support at 111 even. E-mini S&P right now, well below the session VWAP. Oops, sorry about that. And we have some really nice targets as well to the downside. We have zero DTE put support at 56.50 right now. Again, Menthor Q. A couple of blind spots, particularly blind spot 1 is an important level, 56.41. S1 on the downside, approximately 56.32. On the upside, we have that JAX 1 level up at 5,700. But even short of that, we have that zero DTE high vol level also, and that's at 56.85. We're trading below the pivot right now. That's going to act kind of as a short-term area of resistance on the upside. Bottom of the value area is support right now from a session volume profile. Gold is on the move. We have just a funky looking volume profile. Point of control way at the top right here, 33.21. We do have a R3, the rare sighting of that R3 pivot, 33.46. On the upside, above that, a lot of just open sky, blue sky above. On the downside here, again, we're going to focus on this call resistance at 3,300 even, which is right by R2. Two areas of interest, but look at the volume deficit there. Not a lot of excitement there at that level so far this morning. So we'll see if this is sticky at the top or we have some kind of normal retracement. We blew through that one-day max, by the way, pretty convincingly at 32.85. The other thing I'm looking at is Dr. Copper right now. Dr. Copper is, it's trying to inch higher, right? It's trying to inch higher the last 3 or 4 sessions. And then we have some tradable levels here as well, where we have this session VWAP also kind of acting as support right now, right around that JAX 3 level. And then above here, we have that one-day max, again, Menthor Q, one-day max acting as resistance at 4.76 with a kind of nice P-shaped volume distribution with the point of control on 4.7390. Now, I was expecting a turnaround today on this market, and I didn't get it, so I was a little bit wrong. On the downside, though, downside, we have that 0 DTE high vol level at 4.67. So keep an eye on that. That is the Edge Report this morning. Back to you, Deli and Shai.
And of course, we have our guest as well, Ross Kennedy, who's getting everything set up right now. And let's quickly talk about Ross. He's a he's a trade advisor to the Trump administration. And here, by popular demand, Ross, great to have you here. The chat's been talking about having you on for some time. Thank you so much, my friend, for joining us.
Yeah, happy to be here.
So I would like to start off with just a little color, a little background on yourself. Obviously, you know, we're a futures network. We talk about commodities. We talk about all these things that are setting the price for a lot of the things that are happening right now in a lot of these discussions. For us to get a little bit more acquainted with you and kind of what you're doing behind the scenes currently, can you talk to us a little bit about that?
Yeah, absolutely. So 20 years in global logistics and supply chain, a lot of that in the commodity space, particularly on the movement of energy, ag, minerals, and then a lot of hazmat, products as well as defense articles. And so that exposure, and I started out as a trader. I was terrible at it, but I was pretty good at trading freight, so I stuck with that. The exposure that I've had over that 20 years is kind of what led me to this path where as I went from moving things, I then went to being involved in setting up supply chain operations overseas, interfacing with locals, working with those, within those countries. And then over time began kind of recognizing that the dynamic that I think now is very apparent, which is that we had this increasing bipolarity in the world that particularly accelerated during the early years of Xi Jinping, between a China-led sphere, if you will, and a U.S. sphere, that the U.S. was falling behind, and that the goal of things like Made in China 2025 was going to be accelerating dramatically China's ability to advance and begin to hold the high ground and one or more critical spaces. And so you flash forward to today, and you take kind of the talent stack that developed over the years. And it was apparent that as much as my cynicism about doing public sector work, tended to win out, that this was the time to be able to, be one of many, many people kind of throwing their hats in the ring and saying, hey, what can we do here together at this very late hour to try to make this right, to try to reshore, reindustrialize, maintain edges in places where the United States still dominates, as well as make up lost ground and get back to a place of dominance or parity in sectors that we've eroded in. That could be shipbuilding, that could be mining. So that's kind of the thesis of how I got here today.
Got it. And so the question that a lot of people are probably talking about when we see it on social media, but also outside of there, because there's a world beyond social media, Ross, right? We sometimes forget about that, right? As we get so closely tied to what's happening out there. Empty shelves is that talk right now. Like, what's happening, this tension between U.S. and China with these trade deals. Are we going to see empty shelves? How's this all going to pan out?
Well, as far as anything that's a current empty shelves effect, the tariffs haven't even been in place long enough to meaningfully impact what would be coming in. You had basically a hard stop out of China. You had a couple of weeks of disruption until we saw the reciprocal tariffs be leveled across the playing field, except for China. But the 145% obviously stung, and it was intended to sting, not necessarily on the U.S. side, but certainly was, I think, coming from a place of strategic understanding of how dependent China is on its exports to be able to fuel the rest of the money machine. So everything that they do from a white, gray, black perspective in their geopolitical maneuvers, their domestic policy. China's a very industrial policy country. They're not consumer policy. And so when exports are constrained and choked, as much as there may be an impact here in the US, it's going to be even worse because they're going to have to essentially dump these goods on their own economy and contribute to a pretty significant deflationary effect. So that's on kind of the big picture policy side of what we're seeing play out. As far as the empty shelves, given the relatively short time lag in terms of actual supply chain, what we're seeing now is just people panicking that they're not going to be able to get their hands on things. And so they're kind of clearing the shelves. They're worried about prices going up on things that either historically have been made in China or are largely comprised of components there, even if they're made in other places. And it's the same thing as we saw in COVID. The first thing that vacated the shelves was toilet paper, paper towels, Kleenex, things that people wanted. Well, the US has no imports of any of those paper products. We make all of that right here. And to the extent that we saw those shortages, it was simply the lag between distribution centers and trucking not being able to refill the shelves as quickly as normal, because it's not like stores carry weeks or months of inventory, particularly of either fast moving, fast turning things. Most stores have gone, or brands have gone to a just-in-time supply chain. And it's the same for higher value goods. It could be cell phones, it could be computers, it could be PlayStation 5s. So shortages that we saw there during COVID were just largely a lack of supply chains not being able to keep up, and then eventually turned into congestion sort of late 2020, early 2021, where things just couldn't get out of the ports. So now what we're seeing is while there has been a significant reduction in goods coming out of China, there's been a significant pop in volumes that are flowing out of Asia. And so I think, 2 weeks ago, everybody was looking forward to week 20, week 21. So week 20 would be next week. Week 21 is the following. A vessel arrivals saying, oh my gosh, the US ports are already empty. Well, it wasn't, right? That was selective, kind of like scaremongering. But then we look ahead to the Port of Los Angeles's numbers, and I have them up on my other screen here because I cheat. So we had, vessel arrivals for this week, only 15. That's down 16% previous week, 35% down previous year. Then we look at next week or week 20, we're up to 21 vessels, which is a 21% increase from this week and only down 11% from last year. Now we look at week 21 further out, that's 20 vessels arriving. That's up 24% from next week, and that's up 65% from this time last year for the same shipping week. And then you look at the Port of Long Beach's numbers, and it tells a different story. The Port of Long Beach's numbers are actually declining versus where they were, over the last few weeks versus where they were this time last year. But the thing that's driving that is that Long Beach is a primary hub, not Los Angeles, for the Ocean Alliance, which has Costco and OCL as two of the four carriers in a vessel alliance with CMA and Evergreen. Those vessels were primarily Costco vessels that were calling the Port of Long Beach. So what you're seeing now is a secondary effect of the fear actions being taken potentially by the United States Trade Representative's Office on Section 301 that pretty clearly and specifically seem to be targeting Costco and OCL, at least on the container side. So what we're seeing is as volumes are declining out of China, there's been a lift in things coming out of Southeast Asia in particular. You're seeing an increase in volumes out of Korea and Japan as well. So there is optionality in the market, but then mixed in with that, of course, is going to be some level of two-stepping activity. And that's where customs has a job ahead of it to ensure that goods coming in that are declared as being origin Vietnam, origin Indonesia, origin India, whatever it may be, are actually coming from those countries and not just being flown into those countries and then routed to the US to dodge tariffs. It's unknown at this point, I think, by anybody what exactly that mix or that ratio is. But a lot of things that China was able to heavily subsidize could be made, can be made rapidly in other countries. And I think we're starting to see that effect as well.
And then I had a question. Obviously, everybody, you mentioned empty ports. Of course, there are a million posts all over X that there are these empty ports and that, the whole logistics chain is going to fall apart and every trucker is going to be fired and every port worker is going to be fired and we're going to have this huge unemployment problem. And so, what is your outlook on this? Because there just seems to be a lot of, fear mongering just around the domestic logistics sector.
Well, the one that there's no doubt that's actually hardest impact right now is going to be international air cargo coming out of hubs in Southeast Asia, coming out of China, and that was largely your de minimis goods. So things that were each shipment was valued $800 or less. As of May 2nd, the administration fully implemented the new de minimis rule from China and Hong Kong, meaning that those goods, while still not requiring a full formal entry, a full 3461 entry, are now going to be either hit with, if it moves through freight forwarders or through the courier network, that's your FedEx, UPS, DHL, any goods that come in there, regardless of whether they're undervalued or not, which is a common tactic to be able to reduce tariff exposure, would still be hit with 120% ad valorem of the value, meaning the declared value times 120%. That would be the duty rate on those type of shipments. Anything that's carried by USPS through the postal network or other postal carriers, such as China Post, which has more or less stopped carrying these things to the U.S. and then interlining with USPS or others in the U.S., those would be hit with specific duty rates of $100 per shipment to increase to $200 on June 2nd. So the vast majority of those goods were moving, as air cargo, because you could, cram 1,000 or 2,000 or 3,000 of these packages at a relatively low cost per unit, inside of a cargo plane. So with the minimus going away, and now the big shippers that utilize that, Amazon, Temu, Shein, everybody's having to recalibrate pretty rapidly. That's a relatively short notice policy in terms of their ability to adjust, in terms of their, the choice being to eat an enormous amount of loss that they hadn't counted on at the beginning of the year. And you're going to see some of that begin to shift back to less than container load consolidation, where things get consolidated in a warehouse and move through. But if those things are coming out of China, they're still going to be hit with 145%. So there's not really any good options for Chinese exporters or American companies that are 100% dependent on China for their sourcing and supply chain, particularly for lower value goods. From the overall vessel capacity standpoint, inbounds to the United States currently are and still project to be more or less what they were in 2019. We really, over the last 4.5 years, have changed our perspective. It's become normalized, the massive amount of goods that were flowing into the U.S. for consumption out of Asia relative to the global baseline, 2019 and prior. We're essentially back at where we were in 2019 for vessel inbounds. I saw, a post going around that had caught fire on X about, look at this empty terminal at Seattle, Tacoma. It's the end of the world. That was a terminal that has not been in use for commercial cargo for years. And there was actually a Coast Guard vessel berth there because it's become a maintenance and repair dock for the Coast Guard on the Pacific Coast in the Northwest. And so there's a huge amount of misinformation out there because people don't understand. When they talk about the Port of Long Beach, they're talking about something like 6 to 8 container terminals. When they're talking about Los Angeles, it's 12. When you're talking about Oakland, it's 4. And they don't understand the very, very complex interplay. And it's the same for the East Coast. If you look at volume reductions in the Port of New York, New Jersey, as opposed to, say, a Savannah, where everything consolidates into the Garden City terminal, up in New York, New Jersey, there's 6 major container terminals that are considered to be part of New York, New Jersey, just like there is in Los Angeles and Long Beach. So then you have to drill deeper and you say, okay, which carriers are more affected? What are the trade lanes, the specific routes and vessel strings that are most impacted? And when you dig deeper and you take a look at things that are, calling Kaohsiung, things that are calling Busan, things that are calling Tokyo, things that are calling Ho Chi Minh City, we're not really seeing a reduction. We may even be seeing an increase in volumes out of those hubs because people have been now forced into a choice of, do I make relationships with these factories in other countries that don't subsidize on the backside near as heavily as the Chinese do, but still get us, comparatively way below anybody else that continues to source and pay the 145% tariff. And that's where the empty shelf effect is. And obviously it's upstream impact that we would see in drayage, that we would see in domestic trucking. For the foreseeable future, the truckers, the railroads are not going to see as much of a reduction as people, forget, because most people don't understand that a great majority of these supply chains have a significant amount of optionality. things like solar panels, things like EV batteries that are heavily imported to the US from China, those are going to be hurt more because 6 to 8 companies in the global top 10 in those sectors are Chinese. But then you look at other things that are coming in, things like consumer goods and what have you, that tend to push a lot of volume. There is optionality. Is it perfect optionality? Is it going to maintain perfect price stability? Probably not. But to a large degree, supply chains can be very self-healing for a lot of the things that people are panicking about, and that drive, the volume to these downstream businesses that are moving freight throughout the U.S. network.
So, Ross, we're out of time with you today. I appreciate your time, but I want to see if you can answer a couple quick questions from the chat.
Sure.
And I'm fascinated by the outlook of driverless transportation, and this question came up. And so, how do you see the outlook of driverless transportation services in this domestic logistical slowdown?
Well, you've got a couple things driving that. Number one is there's not a truck driver shortage. In fact, we have seen per mile rates and net take-home earnings after inflation and everything else amongst the carriers actually decrease due to a significant pop in foreign-born drivers that are here on visas, many of whom don't speak English, which is why we've seen DOT in recent week or two take action to reinstitute the English proficiency requirement. So that's going to be bullish for trucking companies that have done it right, that have continued to hire US-born or English proficient drivers that are more professional. When we take a look at the driverless side, now there's a whole host of connected vehicle rules, regulations, things that we haven't really sorted out yet, particularly in urban environments. As any LTL driver that drives in a Washington, D.C., and New York, Los Angeles can tell you, deliveries in a lot of these are highly professional, very, very low margin of error activities that require a lot of experience. And the ability of sensors to be able to maintain turning radius, to not run into walls, to get right up to a dock, the way a trucker can, watching a dock guy give him, the distance to the back. That's all still not solved problems yet. You're probably going to see automation show up more heavily in long haul routes, where an aging driver population, it's hard on the body, it's kind of hard on the spirit being away from families. So I think you're going to see places where there's vast long distances, where things can just safely drive straight or with gradual turns. I think you're going to see it there more. But we're really probably 20 to even 30 years away from the intersection of all of these things being figured out and seeing widespread adoption of driverless technology.
And we'll end it there.
All right.
Ross Kennedy, trade advisor to the Trump administration, insight that I just haven't heard or seen on Twitter anywhere, and everybody I read. And this was absolutely fantastic, Ross. I can't thank you enough for your time. I really appreciate it. Thank you so much for joining us on NinjaTrader Live.
Thank you.
Happy. Thanks for the invite, guys. Be well.
Well, lot to take from that. I mean, I have to go back and watch that tonight, Shai, is what I have to do.
He's amazing. He is, and he gives you such a wealth of information. I've had him on Mic Drop Markets several times, and had to re-listen to it. So,
Yeah.
So he's fantastic.
I think the initial reaction to me is, and actually you can go and see, make sure you follow Ross on X. I recently started following him because of you, obviously, Shai, and he put out a tweet, said China's manufacturing economy is a jobs program dependent on exports to power the rest of its leaders' agendas and machinations. I never used that word before. Machinations. I want to make sure I get it right, because Shai, I get a lot of names wrong. You don't want to say things, people make fun of me. If they cannot export, they must deflate. Some games are or become zero sum. When you look at it from that perspective, it's like that's a great perspective as to what happens is if all of a sudden China can't export to the U.S., they have a massive deflation problem there, and they have an overabundance of stuff, and then they need to move that stuff. I mean, it makes you think. It shows that there could be a light at the end of the tunnel, because when you look at it from what's happening from their side and how much we buy from them and all these different things, I think that was perspective I thought was interesting. And also how he talked about how quickly other countries pick up the slack.
Yep,
exactly. That's interesting. I mean, because that's something you wouldn't think happens that easily. But again, people like to make money.
right?
People find a way, man. Just saying.
Where there's a will, there's a way. But I really like Ross because he presents both sides of the equation where mostly, we only hear one side. A lot of people don't talk about what it's going to do to China. We're just talking about, what's going to do to the American consumer. So he's very insightful.
Yeah. All right, Shai, that was great. Thank you so
All right.
much. We'll see you later today.
Thanks, the Unhot Commodities.
That's right. All right. Next up, we have the one, the only Pharm. Good morning, Pharm.
Good morning, Dilly. How we doing?
I'm doing great. I wake up every morning and I read and I do things to educate myself on what's happening in the world or other things I want to learn about, right? And that this morning with Ross was very interesting because although we're short-term day traders, I mean, I know that you and I I do more swing trading than you do, but we're not as focused as much on the macro, but we like it, and it's interesting to understand what's happening behind the scenes. I know you caught a good part of that. What was your thoughts hearing that this morning from Ross?
Yeah, I caught sort of the tail end, and I think it was nice to see things put, a little bit objectively and balanced because, you certainly get, some sexy tweets on X, right? Whether it's, talking about a complete and utter collapse of freight and logistics or, and the other side might completely dismiss it. But I mean, all I know is that my wife made us take a Costco trip to stock up on a whole bunch of toilet paper. So it's probably a big nothing burger, given that. So, I mean, we'll see what happens. But fortunately, with so many kids in the household, it doesn't matter how much toilet paper I buy. It's only going to last a few weeks. So.
Oh, man. You with the 4 kids and everything you put on X is really, I mean, you're so much more than just trading on X, Pharm. People, you better be following Pharm on X because he is the best. This morning, I want to talk about a few different things. I think we go right into the charts this morning. I want to start off with crude oil. Coming off of Ross, I feel starting with commodities just makes sense, although we didn't really talk crude oil. But, this morning, I came in, and as I do every morning, I look at my, net change positive. I look to see what's really the biggest mover. And early this morning, and even late last night, crude oil was just that. And when I look at crude, as I said this morning with Shai, one of two things. One is either you're looking at things, well, you're always looking at crude oil from a supply and demand situation. Is there less demand or is there more or less supply, right? And so that's what you look at. Talking with Shai this morning, so they increased a slight bit of production, but overall, or whatever they adjusted, in terms of production, you had a reaction to the downside, and now you have, I think, where the technical side of things get really interesting in crude oil, and I start to look at it more and more and say, does this market start to have the opportunity for me any sort of swing positioning? Because what I look for is markets that get oversold, and when they go down in bad news, this is really the Jason Shapiro mindset, but it's something I've done myself over the years. I'm not using COT data for it, but you have a market that's trying to go down on bearish news. It can't make a lower low. You see Bollinger Bands, it gets right to it. And the Bollinger Bands are opening, but we're not like hugging that bottom Bollinger Band. And we get back into this range that we've been in. Crude oil to me starts to actually look like the potential for a little bit of a sustainable bounce here. Like I said, kind of regardless of what the news was. I know obviously it initially was taking bearish, but my point is, and even Shai said it was kind of not really bearish, more of an overreaction. And so I also take that into account, and I look at this and say, we're back in this range. They couldn't break outside of what we've been in. And so we just keep wicking outside of this area. And I look at this and go, crude oil becomes interesting to me from a buyer's perspective. What I look for is I have a VWAP connected to the recent high of the move because I want to see where we are relative to it. We've been hugging a 2 standard deviation. So today I look at it and go, if we can hold above like 56.30 for me, I wouldn't be surprised to see us go back up into the mid 58s. And you've also got a gap there. Gives me an area to lean on this low. And any sort of pullbacks today, I'll put this in chat. I'll be looking to buy crude a little bit today because to me, you had news that tried to take it into a new low. It's relatively, to me, I look at it as it's relatively cheap risk for good reward and not dollar amount risk price risk. You know, if I could start buying in the high just below 57 this morning with a stop below this morning's low, you got one standard deviation move back up to 58.40, which is right around the gap. And that VWAP way up there with the 8 and 21 moving averages comes in the mid 60s. Interesting to me. To me, this is an area where I don't mind. It's one of those things where I look at every swing trade that I get in is that if I want to get out with confidence on the stop, I don't mind if I'm wrong here. I use Pax's line because he steals all mine all the time. You know, so I'm going to steal some of his. I don't risk money or I spend money. I'm not even going to get it right because I don't want to totally steal it. But he talks about how he spends money, and this is a perfect scenario for me for that. So that's what I look for this morning in crude. So I wanted to talk about that, and I want to go to gold too. Gold, Pharm. We talked about this last week. Every single high of the day, besides Fridays, Thursdays, and Fridays, was that VWAP anchored from the high. We're back to it. I don't really have the appetite for being short gold, but I think as an intraday trader, I look at this and go, not a bad area to start scalping short. From a swing position, I don't want to swing against primary trend in the middle of the range. I would swing against primary trend at the edge of the range. Go back to crude oil. Primary trend is more down than up, but if I'm at the bottom part of the range, I don't mind a mean reversion look. I don't like swing trades in the middle of ranges. So when I look at gold, just want to put out there and say VWAP from the high is pretty much the high of the day today. Struggle to see them pushing through that with any, I mean, if they do with even some sort of authority, I expect some time to be spent around 33.30. So just some awareness there in gold, not a trade opportunity there, but something that I'll look at. And the last thing I want to get into before we get into the indexes is the bond market. And so the bond market, you know, I had this out there. I got to move that over a little bit and this as well. So when I look at the bond market, they are moving lower this morning. And when I go back and look at the body of that candle, because I put this out there with you last week and we talked about this, you know, you go back and look at this big move lower in bonds. I highlighted that body, and that was the stone cold high of the move last week. Now we've moved back down below all the moving averages. Going into a Fed week, keep an eye on this. I mean, no immediate trade scenarios for me here, but when I look at this, it doesn't scream bullish. It tells me it looks like rates are probably going up. It's interesting coming into a Fed week what this will look like. We'll see what positioning looks like coming into the Fed. I think it's more two-way tape than anything, but it leans more bearish than bullish, and that's something to watch coming into a Fed week. Again, really hard to trade a bond market going into a Fed meeting. Lastly, we get into S&P and NASDAQ. Look at S&P, man. I mean, it's just one of those things where it's like, yeah, this pullback, you and I talked about this last week. It could have pulled back to 5,300. I talked about it, and I'd still have been bullish. This is a hard area, man. I mean, I just have not been trading equities indexes right now. It's just like, what do you do here? We went from, I think, you know, way oversold conditions to now we're getting near overbought conditions. Again, the RSI, I don't use it as an indicator to get into a trade, but I look to see where we are on a relative basis with moving averages. It's just a simple viewpoint of what is something from a traditional indicator standpoint of what the market's showing us. And you're plus 70, over 70 on the overbought. You know, your 2 standard deviation at the from the VWAP from this recent swing low. Actually, I'm going to move that over to right there. So you're almost 2 standard deviation from that recent low. And the VWAP anchored from that low comes in right around 54.90, so roughly 5,500. I look at Pax's level as 55.09, as he says is a big, huge level to watch, and that comes in right between the 34 and this VWAP. I wouldn't be surprised to see a pullback to there, and that'd probably be a buy. I mean, that's the way I look at it now. Like, we're trending higher. I said last week I was the bear who thought that this was a bull market bounce, and I said the earnings said, hold my beer. This is more than just a bounce, and I adjusted it as to what the tape is. But I can't be active in this tape from a swing trader perspective because it's too hard for me to manage risk. I'm not going to be short here. I can't put on longs. I wait and watch. But for short-term day traders, I think it's a two-way tape. I think it remains volatile. And, you know, that's just what I see. I mean, to me, the opportunity right now is long oil is what I see. I think other markets right now, we'll see. But that's what I've got this morning, Pharm.
Yeah, oil is definitely interesting. I'm probably gonna have to take a look at it. I'm kind of waiting for a shot in like the 51 to 53 range, and I think you're right. I mean, it looks like it just doesn't really want to go down much more. So I might have to start looking at it for sure. On ES, we've got that big spot that we had talked about on the way down, basically 57.20s, 57.40s as being sort of a huge high time frame spot. And we arrived there, pretty much having been shot out of a cannon for however many days in a row. So no real surprise that we stalled there. The night has been a little bit heavy, but I mean, we're really just sitting by Friday's cash hours low. And so while there hasn't been a whole lot of movement to the upside, we know how quickly that can change. But for me, like I agree, we talked about breaking away from this, this big range, 55.20 to 55.40. 55.09 was Q1's low. Breaking away from that range is very constructive. And now we've sort of traversed, this prior range of consolidation that we had up into those 57.20s. And definitely a fair spot for us to pull back and cool off. And, I think you're right that, kind of big picture, there's a lot of damage that needs to be done before this flips meaningfully bearish. We know that can certainly happen soon. But as of now, my big picture lean is also that, if we do get a pullback here, and even if it's a couple of hundred handles, it's probably going to be a long, at least initially, and then we see what happens from there. Because, again, breaking away from this range, there's just a lot of trapped volume down there. So getting back through there could potentially be difficult. We saw that Wednesday liquidation just got snapped right back out of that range. And so that sort of freshened things up for bulls and gave them these legs to get up into these 57.20s. But, I'm definitely not, it wasn't about to be, naked long up there in the 57.20s. But at the same time, it's not like, it's just kind of hard to take any kind of conviction short. And you'll see, once we get into some of the, the weekly volume profiles, it's just, I mean, there's kind of a lot for sellers to get back through before there's any meaningful risk for buyers. I mean, we had another bull gap last week. So that runs basically 56.07 to 56.19. We've got a, regular trading hours gap. You can see the thin area of this volume profile basically here. And so to me, until, and I would even really honestly, like I would give it to like 55.70s. I mean, really anything above 55.70s is probably okay for bulls as long as they were to, kind of reclaim that bull gap. So like, I mean, we're just not really close to seeing longs be under any kind of meaningful pressure. And so again, while it's been heavy and we just sit right by Friday's low, at any point in time, we could just fire higher and that buy program turns back on. We reclaim Friday's low and just rip back up through range. So I think it's, two-way here. I think you generally have to favor longs still, unless you see something, different at today's open. Each week, I say we get kind of a fresh set of participants. And if they show themselves to be sellers and strong sellers, then okay, fine. Maybe we'll look for that pullback and see how far they can take things. And if any major technical damage can be done. But, so far, the stronger side has very clearly been buyers, pretty aggressive buy program in the tape that I'm looking to see if maybe that was an exit up there in the 57.20s. But that's really what you're going to be looking for is when that just completely changes. Dips are no longer being bought. The bid's not being, driven up higher and walked up through range, and just all of a sudden we start cracking prior day lows. So, I mean, until that happens, that we form some kind of a multi-day balance and then break that to the downside back on like the daily. Like if we put in like 3, 4, 5 days up here and then break that back to the downside, into the prior range, I think that's more bearish than if we just like pull back directly. Because to me, if there's not like some kind of obvious reaccumulation of, some kind of a short position or what have you, then, a pullback is more likely going to get bought than if you have like multiple days of consolidation. So that's where I'm at, generally favoring longs. Don't really want to be super long up here. But for day trade perspectives, they're not in any meaningful trouble just yet. And if that does change, I think you're probably right that we're looking at a long after some kind of a meaningful pullback. But like, I mean, let's see if sellers could even sustain below a prior day's low without just ending up in some kind of bullish engulfing candle like last Wednesday, right? So we'll talk about shorting this market when we have some kind of a reason to want to join sellers.
No, exactly. I mean, it's like this is why I think day trading right now, short-term day trading, is the best place to be in the indexes, because for someone like me who will like to hold a position, at least I try to hold them for at least one day. Typical hold times like 1 to 3 days, sometimes a little longer, not likely. Especially if I get it on a Monday, I'll try to, you want to hold it. The goal is to hold it as long as possible. When you start getting into a swing trader, it just means because I'm right. It doesn't, what I mean? So it's not really one of those things where it's just the time is not that much of a factor for me, but fading this rally is so difficult because I'd have to put my stop in so far away, and it's like I'm going against the grain. I can't really be long. I'd have to put my stop so far away. I feel like, you're kind of caught here. But for short-term day traders, I think it's going to be a two-way trade. I think you're going to have a decent amount of movement. Obviously, you have PLTR earnings later today. You got FOMC at the end of the week. So nobody wants overnight risk right now anyway. I think short-term day trading, stay focused on the short-term charts. We could be inside. Are we totally inside of Friday's move, Pharm? Let me see.
At least on
we
all
are,
hours
right?
basis.
So opening range.
Yeah.
Yeah. So opening range is the overnight high on Sunday night. Let me see what it is in NASDAQ too. Pretty much opening range on Sunday night is the high in both S&P and NASDAQ, and we're inside the body of yesterday's range, Fridays. Hard to see a reason for them to go back and take out that high. But like you said, the interesting markets we have these days, and they have defied all gravity. Just when you think that the market can't go up 3 days in a row, it goes up 9. So, right. I mean, that's what makes this so difficult here, But short-term intraday, that's the way to be right now.
Yeah, you mentioned PLTR earnings. I mean, that's going to be kind of interesting. I mean, it was kind of a half joke, but not really, and obviously not enough time to get into it. But I made a half joke, months ago that the index would top when PLTR topped, and you saw that PLTR had that pretty nasty high that it put in however long ago, a couple of months ago. I guess it was February 19th, I suppose it must have been, because that's when the index topped and like all hell broke loose. And like, I just wonder if, PLTR earnings, who knows, maybe they do it again. So I actually kind of am somewhat serious in that, if they have a good earnings, which I think, they're probably going to, doesn't mean that it gets bought and it goes higher. But if there's a sustained break, from its prior high, I'm going to take that as a really weird and bizarre subtle clue that we may see continued strength in the indices. Whereas if it cannot bid higher, especially on good earnings, right? So, if you get a really good earnings report and you get a news failure and it just can't go any higher, then that might be interesting to me. And I might look for that as a subtle clue. Weird stuff, I know, but like sometimes the most bizarre and stupid things actually end up working. So definitely looking forward to seeing how that goes.
Yeah, no doubt. Let's dive into the intraday plan as we've got a couple minutes left with you today. Like we said, overnight highs are basically the opening ranges of where we were on Sunday night in S&P and NASDAQ. Initial thoughts coming into today's range. Where would be the first opportunities you might take a look at trading the indexes?
Yeah, the first thing that I noticed, and I always take note of this, is that we do have a large gap down on an extended hours basis, right? So like the 5 p.m. close was up here around 57.10-ish, and we gapped down out of there and have not filled that in yet. So when I see that, I get a little bit cautious taking longs. And so like we had some longs planned that could be, longs overnight. And, obviously longs didn't really perform very well overnight. And this to me is one of those subtle clues. Well, now we've gotten to the point where we've come in and Friday's cash hours low, 63, and we're just kind of chopping right around it. And so, we could open, we got 30 minutes left, right? So if we do see some drive lower from 63s and new low of night, and we open on a true gap down. Then the same true gap rules that it seems like we covered every single day last week, that we had a gap above a prior day high or gap below a prior day low seemingly every day. We should be pretty comfortable with those kinds of trades. But, you know, barring that, just sitting right here around yesterday's low, I mean, it just kind of looks like sellers were just getting soaked at, I said yesterday's, Friday's low. So to me, you know, I'm not looking to initiate a short down here. That's for sure, just like right at Friday's low. But I think, you know, we could see some early rotational trading between, I don't know, maybe 60 and 80. I've got this 80 to 82 to 85 spot. And like, I don't know. I mean, all last week and the week before, you know, we didn't really see, once cash was open, we haven't seen sellers actually defend a level from below and then make a new low. And we did see that early overnight. And again, now it's just sort of sitting here. So if we do get an opening drive lower and we take out Friday's low, which again, we're sitting right there, and we take out the overnight low, and we've talked about that a few times, it is suggested that potentially you have some stronger sellers in the tape. And so for me, I'm holding off, and I'll probably want to see, like, can we even take out the non-farm print, right? Which I think like that 8:30 candle was right around 49-ish that it opened. Can we even take that out? You know, and if not, I don't see any reason to join sellers. I would love to see something like 5630s, like low 5630s. I think that's a buy. But it's just like, it looks like we're probably going to open sitting right around Friday's low. And I'm not looking to be short anywhere near there unless it's proven to me at the open. So I'll probably be looking for longs. I still am a little bit cautious about the fact that this gap never filled. It's definitely a sign of weakness, at least early in the session. But we've seen how, like, when this buy program turns on, it just kind of goes. So if we sustain above, you know, 70, 72-ish maybe, which, you know, sitting right now is the overnight value area high, this thing can turn on so fast that I think you get these 82 to 85s. And then from there, you're probably just coming all the way back up close to 5,700, where I'd probably not want to be aggressively long. So I'd probably be taking some off there and then see if we can run some back up to the 5720s. So, you know, general lean is, if we're sitting down here, is I'm probably looking for longs unless sellers prove it to me. And then, you know, maybe I'll kind of scalp some kind of short if we just open and just head straight to hell. So two-way for sure, but I got to lean with bulls now that we're trading lower and just haven't really gone anywhere.
Yeah, well, as usual, everybody, Pharm is with us Monday through Thursday from 8:30 to 9, going over his technical strategy and what he's looking for each and every day before we get into the trading session. So make sure you hit that like button, hit that subscribe button so you never miss an episode, of course, of NinjaTrader Live. And Pharm, 15,000 people have signed up for NinjaTrader Live in the first 2 months on the YouTube channel. It's pretty cool, you know?
Yeah.
So we're growing, man. It's doing well. So everybody, make sure you hit that like and subscribe. Make sure you don't miss an episode of Pharm and Pharm Navy. He's got the navy blue on today. We'll see what he has on tomorrow. He's got a whole array of colors of shirts that he wears every morning. So we look forward to those as well. Pharm, you're the best, my brother. I will see you tomorrow.
See you tomorrow morning, Deli.
All right, traders. The moment has come. It's Monday, and that means Tanja trades. Next up, we have Tanja trades to trade the open. Good morning, Tanja. How are you?
Good morning. I'm great. Ready for Monday. Finally, we have a Monday with some red folder news, so kind of excited for that.
Yeah, you know, you got PLTR on the close. You've got FOMC week. Earnings are going to get behind us. FOMC week is going to get behind us this week, but as we start off the week, we've got them in front of us. Overnight, we talked about with Pharm. Overnight opening range is the high in the S&P, high in the NASDAQ. Coming in, technically, how are we looking?
You know, honestly, I do like the rejection here from the NASDAQ and the fact that here we do have a divergence with ES on the daily there, where the NASDAQ took that April 2nd high. And ES didn't, and NASDAQ did retrace all the way up into this daily fair value gap and has rejected since there. We couldn't close into it. So it's like a area that makes sense to pull back from. And on the 4-hour, we have been pulling back. We're down into definitely below 50% of this leg up that broke the previous swing high. We haven't shifted on the 4-hour yet, but I do think a lot of people have been looking to short in this area. That's actually a good area to probably hedge from if you got long earlier in the month, to hedge with shorts and perhaps put on a swing short if that ends up being that swing high. I will be looking for, like, today. It's possible that we're forming a swing high in the daily then, I would like that. If today has like a down close, and also I'm looking for more, which is likely that we have a down close candle. I'll be looking for more downside in the coming days, probably. Because there's a swing high that's probably forming here on the daily. And it does make sense to have a retracement now. We've had how many days up? Green up days, 1, 2, 3, 4, 5, 6, 7, 8. 8 green up days on the NASDAQ. Which is pretty crazy. I was looking back at it. I don't think we've had that since last year in May. We had like 9 or 10 green up days in a row. So yeah, I'm kind of more interested in shorts today. Especially since, we did have some break on the hourly, and we are following bearish structure on the hourly. 4-hour hasn't shifted yet, really. So I would like to see us drop down below this 9 a.m. Friday open, and then look for more continuation. Then I'd look for shorts all the way down to here, 19,750 area. Totally possible. That being said, I'm going to be definitely keeping an eye on ES because it has been the weaker one. So what would kind of be strange to me is if today I see ES be stronger, then that would be show me more of like a rotational into other equities and other areas of the market, rather than it being a reversal on all of the indices and all of the market. So I want to see them in sync, which they are so far today. And also, yeah, I'm like kind of interested to see what happens at 10 a.m. news. I think that'll be important. Finally, we have like some red folder news on a Monday. So that will be pretty interesting to me to look at. But yes, at the minimum, I want to see us close below this fair value gap. So then at least I can have a market structure shift. But on the 4-hour, I would like a close below these 2 green up close candles for confirmation that we're going to go lower than I'd go for here. That trade might not start developing until later in the week. But in the meantime, I'll be watching out if we retrace back above this pre-market high. Are we going to have a nice clean rejection? Are we going to really retrace deeply up into here? Then I'd be less likely to want to go for the shorts. So let's go down to the hourly on ES as well. Yeah, so it's London high. I'll see how we react there if we do reach up back into there. It's a swing high into a liquidity pool. As well as NQ, I'll have the London high marked out as well. I'd like us to, either wick above this or just fail to even reach it, and start showing more respect to the bearish side of things. So we'll see. And then like I said, this was a pretty good target. This would even be a good target here. First target for NQ. 960, 9860, 19860. Yeah, it does make sense for us to have a little bit of a pullback at least. And I mean, I'll see how it pans out to see if this is the start of a potential reversal or sort of a larger pullback. And I think we'll tell with the 10 a.m. news. Obviously, I'd rather us like go lower at the open and then see more follow through to the downside, and 10 a.m. news to deliver us lower. I wouldn't really like want us to be all the way up here at that time. But we'll see what ends up happening. And yeah, I'll keep an eye on that. Like you said, we have FOMC on Wednesday. There's plenty of time until then though. The ranges have dropped a little bit. I think now the average range on NASDAQ is like 500 points, which is, just still large. But like in the past, it was like 1,200 or something at one point a couple of weeks ago. So keep that in mind as well. We have already moved since the 6 p.m. open around 200 points or so. So there's definitely room to go back down to here 19,860 and potentially 19,750 on the NASDAQ. So I'm neutral, but like a little bit more bearish because of that swing high situation on the daily and the divergence. And it does seem like, that could be an area that we did project from, and we're having some follow through here. We broke the Asia low again. We have FEG above it, so that's why I also have London high here marked out, just in case it does one of them wants to take out the high, manipulate it. I wouldn't really want us to hold. If I'm bearish, I don't want us to stay above 2,100 for too long. I'd want us like reject there pretty quickly. So that's what I'm looking at today. What do you think about that, Crudele?
So first thing is you like to short the weaker one, as you've talked about, or long the stronger one. NASDAQ's the weaker one today, down almost 1% on a relative basis. It's the weakest index.
Yeah.
So I wanted to mention that because I think it's important. I like when you talk about that because I think, again, so many traders don't look at it from that perspective. They try to sell the one that's stronger on a weekday because they're like, oh, it'll catch up. And I agree that, selling the weaker one has always been better for me on a weekday, or buying the stronger one on a strong day, always more follow through. So that's just to make that point. Also, I know you love the chat. 537 votes so far this morning, 36% bullish, 38% bearish, 26% neutral. The chat's always really smart, Tanya. It's really pretty even, a slight bit more bearish, but you would expect that coming in today. With the markets finally having a pullback. Somebody put in chat, I think they said the last time we had this many days in a row where we were up was like 04 or 05. I saw that in chat. It came through. I don't know where it is right now, but I was like, it's a long time. And again, like I said, that's not a reason to be short by any stretch, but in this market, anything is possible. Just like I said to Pharm, I said, you don't think it could do 3 days in a row? It does it 9. And so, but ultimately, I think when you look at sentiment, you see that it's kind of broken down into a third. And so I think, again, that actually makes for a decent trading session because, like I said, the chat's usually really smart. And, people are usually a lot of times you see they're pretty much spot on what we're looking at. And you can expect that viewpoint outside of just here into the market today. So expect some volatility.
Yeah, those are really interesting numbers. They're pretty split, it seems like. Typically, they're leaning more one way. So it's anybody's market. It could be more of a two-way tape like you guys have been talking about earlier. And it really depends on if, I would like us to close below this huge up close candle that we have from NFP. For us to continue lower as well. Like this could be a potential bounce area here. Then I'll look at the London highs and everything, but it could be just an area, two-way tape where we're bouncing between two areas of interest, so it could totally be that way also. I'm interested to see what happens at 10 a.m. 10 a.m. news, red folder, Monday before FOMC. sometimes it's best to even just wait until after that. I mean, I'll see if anything happens at the open, but yeah, it's going to be an interesting day, and no matter what, we'll be prepared for it.
That's right, as you always are. 10 a.m. data, everyone. Look down in the middle of your screen. You will see there in that white banner what the breaking news is. Shai will be delivering that data as that comes out, and she will also be in chat for any questions on the data throughout the morning session. Tanya, as usual, on Monday, we leave it to you. Have a great trading session, and I will be in chat, and I will see you tomorrow.
All right, thank you. All right, everybody. Now you're alone with me now. Ha 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 ha. Here we are. It's Monday. It's a new dawn. It's a new day. It's a new session. It's a new week. Let's get it poppin'. Like I talked about, NFP really surged higher. We already had taken that April 2nd high the day before, and then we closed above that. Create another, leg up. If we're gonna have a reversal, it would be nice to have one starting now, It's looking decent. This would be the easy salad here, easy points here. But we'll see how this ends up going. Yeah, on the daily, there's a divergence, which is good. We'll see. With 10 a.m. news. Hourly looks pretty FEG here from NFP in a discount. So that's where I'm like, we could bounce here. And then it could come all the way back to this London high. And then I'd like to see a rejection. A clean one. Otherwise, it could be just a back and forth tape. I don't really want a lot of back and forth. It's just not my type of vibe. So let's see on the 15-minute too. So far, that's like the only divergence I see, which is on the daily with NASDAQ and ES. So NASDAQ took that April 2nd high. ES didn't. This is the Asia low. I want to see like how are we gonna open with and how are we gonna hold this 9:30 open and such. I probably would like to see that as well. So let me maybe put up an indicator for that. It's crazy, you guys. On Friday. Friday was pretty back and forth, especially from the New York Open. It was move up higher. Definitely, I was like, I'm not shorting this. I tried along, got stopped out break even. And then, we got to that target to the upside, but I'm pretty happy with how I ended up that last week pretty well. But there was somebody in my chat that was just so adamantly, definitely just held on to their trade, held on to their guns, even though they were break even and slight drawdown, and they ended up going to their favor. So shout out to Brandon. If you're in my chat, Friday was a funny day. So we'll see if Monday is going to be any good here. I mean, we distributed to the downside a bit during Asia. London, what did the London session do? A little bit of consolidation. So New York has potential. Yeah, I put up on my NASDAQ chart like 8:30 open. No, that's midnight open. I want to make it a better color though. Okay. All right, I got 8:30 open and midnight open there. We have about 8 minutes left. 8 minutes left until the open. Let's see ES on the 15. I always like to start the day like on the 15-minute. That way you can clearly see like the 15-minute swing highs and lows. And you don't get caught up in like the 1 minute of things, because especially if you're coming in on a day on a month, I don't know, I'm never looking at 1 minute swing highs and lows at points of interest. I'm looking at those. I will go down to that smaller time frame when I already have a trade idea in mind and I'm looking for an entry. I'm not doing that when to form a trade idea. That's why I'm always starting on the higher time frames. Because otherwise, if I'm forming a trade idea on the small time frame, I'm more likely to get snapped out of it. It's lower probability. Yeah, with a 15-minute FEG here, this swing high did respect this little fair value gap also. We created another one. So we'll see at the open. Are we going to respect this? This is an hourly and a 15-minute here on NASDAQ as well. So far, we've dug into it a couple times. It's possible that this does not get respected and we sweep that London high. I'm not putting too much emphasis on it. I'd be looking for some kind of divergence. I have 8:30. This is 8:30 open. This is midnight open. I'll also have 9:30 open as a line. Once we get that. But yeah, let's see. Yeah, I'll have 9:30 open when it develops here in 4 minutes. Wonder what I think Anthony was talking about crude. I kind of want to look at that. I'm going to open a chart of that also on the side. We already swept last week's high there. I'll eventually get into also adding crude oil, gold, and euro to my arsenal. It's one of my resolutions for this year. Just so I could have more things to look at if the indices are not in play. You know, some days you just know before you even get to the charts that it's going to be a slow day, right? Or a low probability day. So it's good to then have other assets that are not correlated in any way, right? Really, or in most, typically not really correlated. Like, you know, NASDAQ and ES is always correlated. So then you could have other options and not get sucked into forcing a trade in the indices, you know? $9.27. Kind of wild, you guys. I think Anthony said that the NinjaTrader YouTube has grown by 15,000 subscribers in the last 2 months. That's a lot of growth. That's impressive. So hit that like button, help the stream grow even more. I'm here every Monday, and then I stream on my own channel. Live stream is no easy task. See here, 2 minutes until the open. We have 10 a.m. news. I don't want to forget that, so I'll always like mark that out with a little vertical line. So once we get there, I'll remember. You never want to be confused about why the market's like moving and realize that you forgot that there was news. It's a new dawn, it's a new day. We'll see. You know, I would be pretty unfazed if we go through this area. You know, ES has taken out this little high within it and has rejected. So, yeah, you also got these pre-market lows that I'll have as a point of interest. If we end up closing below that, then, you know, there's more downside. Maybe it'll be a quick market then with a low resistance liquidity run down to the downside. Here's the open. So now I can go down to the one, see how that goes. NASDAQ's pushing up there. Taking out, coming up into that 15-minute fair value gap. Like I said, it could totally surge up through this, even take out sweep London high. Would make sense since we are in that discount on the 4-hour. It's a 9:30 open. Is the 8:30 open in green, and then I have the midnight open in brown there. Okay, so we're down below the 9:30 open now. Kind of interesting there. A little bit of back and forth for the first 2 minutes. Back and forth. Rejected that 15-minute for now. But not really sweeping below or closing below lows at the moment on the one. I prefer some manipulation to the upside, if I'm being honest. So I prefer us to go up than to go down. So we'll see. Right now it's back and forth. What's the range so far? Let's see from here, 93 to 31, like about 40-point range for the first 3 minutes. Nasdaq picking up a little bit. I wouldn't really like it for the first 30 minutes to just be range bound. You can kind of like get the temperature check for the day from how we move the first 30 minutes. Or even the first 15. A lot of back and forth. This is the open from since the open. I'm interested to see if we end up holding this 15-minute structure where we broke that Asia low. Yeah, that 15-minute break, rebalance, break. Yeah, now are we gonna have another manipulation or is this gonna hold? This is London high here. Since Asia did distribute, London, we didn't really move too much, right? For London, it was about 200 points. Yeah. Or less. Yeah. Yeah, even less. 100, 150-ish. Since the 2 a.m. high. So we'll see if we have a manipulation during New York. It would be good. That'll be fine if we take out that London high, sweep it. and go lower, manipulation. If we, like I said earlier during my pre-market analysis, if we kind of don't sweep it, when I say sweep, I want us to wick it and then, you know, reverse. But if we close above and continue, then I'll have to go back to the drawing board with my idea, right? Now NASDAQ has held its 9:30 open. Was it never closed below it? It's approaching the midnight open now. Kind of impressive that there's been no FEG to the upside, no imbalances. It's been very efficient price action, kind of wicking every which way. The wicks be wicking. So you got the first 7 minutes of the day, you guys. Not much I've seen so far. I mean, I'm waiting for some manipulation to the upside to go short it. And we'll see if that ends up even happening. We have 10 a.m. news. So far, you just had like a tiny sweep there. There's not even a FEG to the upside. You know, you're in the 4-hour area. Let's see on the 5-minute. Those that are bullish. Yeah, that's a different kind of story for them probably. In regards to maybe the people that are bullish do have a trade there. Or found one if on the 5-minute there was a displacement. I'm just kind of interested to see this. Yeah. So right now, the first 5 minutes of the day is displacing. Closing above this, we wicked above this one, which is kind of funny, but we held up here. Now we're displacing up there. So that's important for me to note later on to see. I'd rather us reject this 5-minute after we sweep some buy side liquidity. Probably have that marked out. It's like a different type of color, so I can easily remember. Yeah. Yes is yeah, I mean we're staying in this 15 minutes so far, right? We rejected this on the 15 right actually right now on NQ. I'd need to see more follow through to the downside for me to think that this is the end all of the move up. So we'll see. So there's still like 4 or 5 minutes left in this candle in the 15. See on that 5. Okay, so on that 5, yeah, the way that this candle closed was very deep and we're already disrespecting this. So it's not really holding much regard for that. Let's go back on the 1. You can see yes on the left on the 15. It's pretty clean there, rejected there. 1, dug once, twice, 3 times. So this could be a 3 drives up into this area. I need to see some fall through the downside. So let's see. It's the 1 minute. We're back on the 1. Let's see if we close back below 9:30 open. We closed below 9:30 open just now, actually. And about to take out that 8:30 open. No. Tapped it, didn't take it out yet. I'm gonna mark out this. This is a 1-minute swing low here. It's all the way here. This could also be a market where we're kind of, I mean, I'll see. This could be the potential manipulation for sure. But if we don't find follow through, it could just be zigzagging before the 10 a.m. news. Let's see. And that will be dependent on, you know, whether we make a low here and we follow through, we break this pre-market low. We broke a 1-minute swing low there. So see on the 15. Kind of waiting for a little bit more follow through there where I want to see like, okay, 15. This would be nice if a 15-minute swing high is formed. If this is such a big wick, we could retrace back up into this wick area again. That's why I'm kind of waiting. I'm saying like I would want this swing low and I'd want another break of a swing low for me to get in with a displacement. Because the thing is, if I'm right where I'm taking this sell side liquidity, I still have plenty of time until we do that. Until we'll get there. I'll have plenty of time to get in after some confirmation. But right now it's definitely a lot of back and forth. Just look at the start of the day is here. Just swept 8:30, this little 1-minute low. If we sweep this 1-minute high, it's definitely a higher resistance environment. You can see this wick on the 15 on ES here on both sides. I have on the left, on my left chart is ES on the 15-minute. On my right chart is just NQ on the 1-minute. Yeah, so that we could see both the 15-minute structure on ES, just to have a good sense of where the market is. They are pretty much in sync though, which is good. I also do have NQ on the 15-minute on another screen, but you know, I have 15-minute points of interest here on the 1-minute. So just so we can watch this back and forth actions. This is really what I'm saying about earlier in the day about I'm not taking like a 1-minute as a point of interest. So this isn't like a sell side sweep. I'd be interested to be like, oh, now I'll go for longs or anything. But rather I'm just looking at if there's a start of a market structure shift, a start of a reversal, but nothing really as of yet. It's definitely retraced super deeply here. Like I had kind of said, I mean, that 15-minute candle's not even closed yet on the NQ. It will be in about 30 seconds. So that was a lot of back and forth. We were literally below the open there on just a few minutes ago. So, and now we're creeping up towards the high end of that 15-minute fair value gap. So this feels more like a time distortion, like a lot of back and forth before the 10 a.m. news. Sometimes the market does that. You know, you gotta really test your patience. Seems more like a scalper's market right now. So We'll see. A lot of back and forth of about, not even a large range, about a 70-point range there on NQ for the first 15 minutes of the day. Kind of giving us a temperature check. It could be a rangy day. And we'll kind of find out by 15-minute and 5-minute structure. ES here on the 15 is definitely a little bit weaker. You can see that this closes a doji. We're below this gap at the moment. We had our third drive. Maybe this is the point where we'll see a divergence at a high. Maybe NQ takes out this high and serves as a third drive while into this fair value gap, while ES does not. Totally possible. When I say third drive, it just means like third retracement into that point of interest. But of course, then you'd have to see a rejection. And I've been, watching and watching for the potential follow through. Not too much, not much. Let's see on the ES though. We'll see on the 1 here. What's she looking like? Definitely weaker, right? In comparison. We'll go on the 1 minute on NQ again also. Definitely a bit weaker, ES. Can see how much NQ retraced up here. ES is below its 15-minute FEG. A lot of back and forth before the 10 a.m. news. I'm gonna mark out some of my horizontal lines here a bit better for you guys. It's like London highs here for NQ. We have midnight open here. Yeah. NQ still like, it was a lot of back and forth, closed below that 9:30 open, but the 8:30 open could not close below that. It swept this little swing low. Now we're taking out that high, which I said that means we're probably going to be in a high resistance environment. But again, like I said, for my short idea, I did say it's okay. I'd almost rather it take out London high there because of the fact that the range was pretty small during London, right? It's 100-point range or so, 150-point range. If we're looking at like the 15-minute, right? If I want to go to my measurement tool, it's like from here. It's the London high down to here. It's really not too much. 132 points there. It's a pretty small range, right? But it makes sense. If Asia, we had that move lower, London will then consolidate. I don't really want to trade the session after a large, like a displacement, well, a distribution, like a large move, right? So if London had like a huge move, then a lot of times I'm like, okay, New York is probably going to be barcode back and forth action. You can see like Asia, we had a lot of fall through to the downside, like around 300 points or so, right? Or 200 point, 250-ish. So relatively, it's all relative to structure. Very interesting here, actually. This little volume imbalance on ES. ES is definitely looking a little weaker. Look how it's remaining below that 15-minute. And actually, we're getting that SMT right now, right? Where I said maybe that will be the divergence. You know, maybe right here. Maybe that'll be the start of the reversal, since we didn't have anything like that so far, except on the daily on the upside, where NQ took out April 2nd high and ES didn't. NQ retraced to that daily fair value gap. ES didn't. You know, I'd also like to look at that during the session. So this could definitely potentially be the start of that. ES is definitely weaker there, creeping towards those pre-market lows. Maybe we'll end up taking ES shorts. It's definitely following market structure better. ES just, you know, NQ made a new high. ES didn't. I don't really love how, I mean, I really want to see follow through from NQ to the downside, right? So because ES just made a new low on the session, I want to see NQ also fall through to the downside. I want to see us in sync that way. If we have divergences on both sides there on ES and NQ on the highs and lows, then that's low probability environment. Right, I wouldn't want, because I'm looking for shorts, I wouldn't want us to just have, oh, NQ took this high, ES didn't, but ES took this low and NQ didn't, then it's like, okay. And the people that are bullish are going to take this as a bullish stance, right? That's why it's kind of more low probability. So we'll find out here. We have 10 a.m. news soon too, so I'm not entering anything right now. It's like 7 minutes before news. I figure that I'll have plenty of time after the news. I'm gonna just try to put up those indicators on ES as well. Just 8:30, 9:30 is fine because I know we're way below midnight open there. All right, they're very close to each other on ES actually, the 8:30, 9:30 open. We're holding below. NASDAQ has not made a new low. I don't really love that. I want NASDAQ to fall through here and make a new low. So we'll wait. So at this point, especially before the news, we could basically have anything. NASDAQ could start picking up speed and pull ES up. Right, so let's see if this high that we took for NASDAQ, not ES. There's just a lot of back and forth today. I haven't taken a trade yet, you guys, and I'm happy I haven't. I hope that at least maybe my guidance has helped people stay out of this back and forth chop, because we have what's the range here for NASDAQ right now? 76 points. It's very small for what we're used to, right? It definitely feels like it's dragging its feet through the mud on both sides. This is literally like my definition of low probability environment, right? When we have the indices are not in sync. Let's check out. I'm gonna check out YM on the side as well. If we have YM kind of just surging higher, then yeah, YM's the strongest sister. So the indices are not really in sync. course, YM's totally different, but I don't really like to see ES barcoding. I mean, NQ is basically barcoding too. If you just look at where I marked out from the open, right? If we have a 75, 78 point range and you have 1 minute candles that are around like 40 points, you know, just not a lot to work with there. So I just gotta stay patient. You know, I think about this all the time. Is this worth putting my money down for, my risk down? You know, because sometimes it is just to see. You're also just yeah, you're paying an expense. It's a business expense. Even if it's a loss, it's like, okay, yeah, this was a good trade idea, and from getting stopped out here, it was a business expense. And even sometimes I find out, oh yeah, this is potentially the reversal if we have more follow through on the other side. And that's money well spent. But here right now, I can't find it worth a trade for me right now. See, NQ is actually making, so I really don't like that, what we just did, where NQ made a new high, and I was like, okay, maybe that'll be the divergence where ES doesn't take that high and we go to the downside. We didn't have any confirmation of that to the downside. ES took out new low of day. So he had NQ took out new high of day at like 950. And then ES took out new low of day at 953. You didn't have follow through on the downside for the NASDAQ, which is what I want to see next. So we're having some more upside here. So there's no more divergence on the upside here for ES that I pointed out earlier. And I was, so this is just literally an example of me being a little bit of a short bias, a little bit of a bearish bias, and not finding a trade because it didn't confirm anything, and staying safe in that regard. Right? Because I was like, okay, even from the open, I said I would be fine with us surging through this and taking this out. I don't really love the first 30 minutes of the day, you guys, because I said that could, you know, it's a temperature check. Maybe it is just time distortion before 10 a.m. news, and then we'll get some follow through in one direction. But for me right now, especially for us, we're kind of in the middle of this range on the hourly. Don't really love it. So we'll see if we take out this London high. That's a nice session high. And I'd look for a reversal after that. Here's a 10 a.m. news, by the way. It's in the next minute after this. So we have about 49 seconds. And by the way, this is an indicator called bar timer. Some people do ask about that, but that's just like you go on the indicators, you right click indicators, right click, you go to indicators, and then you right here, or you can do Control I, or you can click this on the top in the toolbar. So, you know, we'll see this. We'll see in the next 20 seconds. What do we get from this 10 a.m. news? I'm going to have the 15-minute open so I don't, you know, get lost in the sauce in the 1 minute. On ES, I'll have it on the left side. You know, I have some minor buy side here. Liquidity marked out. This is just swing high. And there's the 10 a.m. news surging up here. Very close to that London high. Not yet, not quite yet taking it out. We'll see if it does. And, you know, 10 a.m. news is either manipulation or distribution. Sometimes it is also, though, just back and forth if there's no follow through on either side. So I prefer this London high to get taken. And a reversal for the short idea. If we just see follow through, then, you know, I have to go back to the drawing board, essentially, if there's no follow through to the downside, if there's no reversals. I'm totally fine with coming in like with like a slight bias like that. And if I don't find a type of thing on the other direction, then not even, you know, taking a trade, because then if there's nothing worth it, there's nothing worth it. Here we're taking London high. ES and NQ. Taking out that London high. 10 a.m. news is a sharp 50-point candle to the upside. Yeah, now you have your swing low. That would be a breaker if it does come down, but so far, you know, we have to see this reaction here. This is a session high. I would not be touching shorts unless we came all the way back down here and broke this structure to the downside. And of course, for the long idea, I mean, it's just super hard for me to figure out because I'll have to wait and see, but with this divergence, it's just like, what would my target really be if I would go for the longs? It's hard for me to figure that out. I'd rather just wait for this to be a point of interest for more downside later on. Or, you know, etc. So you can literally see on the 5-minute how much back and forth action there was here. We witnessed this together. We're all in this together, you guys. Like you can see in the 5-minute, there's no really fair value gaps except for this one. And we wicked it. The wicks be wicking. A lot of wicks on both sides. 50 minutes probably even uglier there. It's like a lot of wick, right? So we'll see on this London high. Well, the 15-minute wick this. I mean, that would be great. If so, I'll be ready, you know. That's what I've been waiting for. So basically what I'm waiting for now is, so we don't need this minor buy side anymore because ES did hit that London high as well. Now I'm waiting to see if we're going to have that market structure shift on the 1-minute. That'd be 2050. You know, we're a ways from there. We're still, I mean, we were just 50 points above. This is looking pretty good so far. I mean, I need more follow through though. This could just be a retracement. If it doesn't break, I'm looking for a swing low to break, at least on the 1. You know. White the wick on the 15. I'd like to say that. We can look at that later, but here it is breaking that low. Inversion. Little waiting game here. I'm very cognizant of the fact that on the 15 we have a wick on the upside. I'm waiting for that 1-minute FEG to form. It's pretty decent then. We'll see. This is above 50%. So if it does retrace, I'll probably end up trying that short. And put my sell in there. We'll see. Now I have a different swing low for that fib. That's decent. This looks good. So my entry is simply this 1 minute FEG above 50%. So we took out London high. My stop will be that swing high if I get filled there. I am kind of cognizant of the fact though on the 2 minute that is a FEG. I'll take a look at that actually. It's at 50%. Yeah, it is. 65 points. 65. Nah, it's okay. I'll leave my limit there from the 1. Probably end up coming back up. Look at ES or tracing actually. Alright. My stop's at the swing high. And I'd go for, well, I have, obviously this is actually a really good RR to this downside. But I have pretty, I looked at this pre-market, right? This 15-minute swing low or hourly swing low. I'd rather hold for that. And I just watch reactions. So far, pretty good entry. I kind of sniped that, right? So let's see if some fall through the downside. If I'm right, then I should be right quickly. So let's see this swing low break next. Let's see us pop through everything else, right? So far, I'm pretty good. So let's see. I want to be bright pretty quickly, so it'd be nice if we start, breaking back below midnight open and all these other. I mean, this is just a lot of stacked points of interest here that I'd like us to break, right? Midnight open, 9:30, this low, this swing low, this swing low. Let me see. I mean, literally it would be a 2R like to here, right? Or yeah. So I'm risking about 35. I'll have to be careful after the swing low is taken. I want to see if we don't have, well, obviously I could literally get stopped out here still, but you know, right now we're doing pretty decently. I haven't been in any drawdown. But if we end up going lower and we break this swing low, but we end up like kind of wicking this area, then I'd probably take the 2R. Kind of weird that ES is kind of picking up speed here. We'll see. This is ES on the left. I definitely do not want ES to break new high of day. That would be really weird. Anyway, still looking for that follow through to the downside for NQ. You know, it hasn't happened very quickly for sure. We've been in this trade for 4 minutes. You know, I'd want us to be here pretty quick, right? So let's see this fall through. I'd appreciate it. Like I said, this is actually going to be like a 2R in this area. I'm risking 35. This is where I'd make like 70-ish points. And I'll be watching this area to see how we do. I'd want us to really just smash through all of this. I want to take out all these lows, stacked lows. If I'm right, then that would be nice. Then I'd definitely hold for more. This is pre-market low also. This is a swing low on the hourly. Yeah, that I talked about pre-market. So let's see. And for this, you know, if I hold for this target, I do anticipate that to take a little bit longer, especially since, well, what's the range been on the day so far, right? It's been very small. Let's measure that. 124 points. You know, if I'm looking for this, it's another 200 points down from here. Another 100 points down from low of day. That could end up taking a little while. Let's see. You know, so far so good, you guys. I've been relatively no drawdown. I did enter here, swept a tiny bit above there. That's 5-point drawdown. Pretty good. Not really sweating this trade, which is cool, but it can change at any moment, really. I don't really love the fact that we're not speeding up to the downside. You know, I'd want to see another swing low get taken pretty quick. It's about 1, 2, 3, 4, 5, 6 minutes so far. Yeah, but I can't be too picky. Don't really love this. I mean, ES is looking weirdly stronger. If ES takes this high, I mean, it's going to be really, really weird, like I've been saying earlier. ES has been weaker. So I don't really want us to see strength in ES, then kind of more indicative of like just a rotation. rotation trade, putting more money into the S&P 500, you know, rather than reversing. So let's see, you guys, I'm up 18 points. I mean, 16 points is just a little bit. I'm a 0.5 R. You know, I've been in this trade for a while. I can't believe it hasn't really moved. I don't really love it. Don't really love that. Yes, surging up higher again. How long do I have to be in this trade for? I would love to know. Make sure my little stop is correct. Okay. Da, da, da. 10 a.m. news, surge higher, took a London high, then we had a big move to the downside. We broke a low. I mean, we took a session high. I'm pretty bearish. I'm happy I got my good entry. But since then, we've been just back and forth. I've been slight profit, break even, well, mostly just slight profit. Now we're coming back into my break even again, which I don't really love. You know, like I said, I want to see if I'm right on the trade. I want to see like immediately break another swing low. We just have not been doing that. ES is going a little bit higher there. Don't love that at all. Now I'm in slight drawdown. Dug into this little FEG once, twice. This is like the third time now. Just digging into this BPR. Pretty low quality market then if it's not really moving quickly. Look, ES, about to take that London high again. Like I said, I really did not want to see that. So I might end up just prematurely taking that stop out because it might not even be worth it if we break this high in ES. Oh, all I can do here is wait. Like I've been waiting in this back and forth for a while. Don't love that we inverted that 1 minute. ES testing London high again. I mean, it's okay for it to be retracing like this, especially if you like kind of looked at the 15-minute. Let me take a look at the 15 again. Yeah, we made a big wick to that upside, so I'm not really sweating it too much. And also I could, this could end up not working out, but on the 15-minute, we made this big wick. Makes sense for us to retrace into the wick again. That's why I got a decent fill there, right? I wasn't chasing here or anything. So, I mean, we'll see. Yes, just retested London high, a little bit of a rejection there. Pulling back. I'd love for some follow through now to the downside. Now we're back around my break even. I'm fine. I'm gonna wait. You know, like those elementary school teachers are like, I'll wait. Like the sassy ones. And everyone's too loud and they're like, I'll wait. I sit there like cross-armed, like I'll wait NQ. Here I'm back in slight profit again. You know, ideally now I want us to really surge lower. That's like a failed breakout to the upside. We rejected London high, yes. Really, really want now to break a new low, swing low at least on the 1 minute. Okay, we're dropping back at midnight open now. I mean, like I said, I want to see a big drop here. I want us to take this all out quickly. I mean, look at all the people that might be on the wrong side. All their stops are here, right? If I'm right, then it would be quick. If I'm wrong, then this is going to be a slow grind, painful grind to the upside. I want to see a break of a swing low here. This is the next swing low on the 1. This is a really... We didn't close below midnight open yet. We'll see what happens in the next minute. It's really going to be annoying if it's a green up close candle. I'd love for this 15-minute candle. When does this close? 10:30? We need to close below the previous. I mean, yeah, obviously. Close below the previous. Should be here. It's a previous 15-minute candle low here. And can we finally give out a little bit? I'm up. So yeah, recap of this trade so far. Entered here, 10-10. Was mostly profit, tiny bit of drawdown. And it did, I was in drawdown for about like 1, 2, 3, 4 minutes. Now I'm in profit again for the last 2 or 3 minutes. We're looking for more downside follow through. I mean, this is really, really barcodey. I'd really need to see this kind of take this out with a displacement anytime soon. NASDAQ would be great. Like within the next 2 minutes would be great. Would be great. 2R is here, by the way. I do just have this kind of, like I might take it off here. I mean, this is a good area to take it off, especially considering this type of environment that we're having. But this is just an hourly swing low that if we do end up, displacing quickly, could be a pretty good banger trade. But so far, we're not having a banger environment. Kind of crazy on the 5-minute looks like. This is definitely a high resistance environment, you guys. But anyway, right now, what I would really need to see, which we did see, is like the indices be in sync. I said I didn't want ES to take this high, I didn't. And now I'm waiting for us to take lows on both ES and NQ. Let's take the next new swing low, be great. Let me put on take a look at my ES. It's retracing again a bit, just a bit. I'm pretty happy with my entry at least, ES we're tracing more. Okay, this is ES midnight open here. Close below midnight open on NQ. I need to see, swing highs get respected now and us break swing lows. It's been incredible, this trade so far. We have really been going back and forth all session long, if we're going to be honest. But took out that buy side liquidity I was looking at. We swept it, we wicked it, we had the structure shift. I entered here. And since then, we've had a lot of back and forth. I've been mostly in slight profit, but that could change. That could change. But how long have I been in this trade for here? Since 10:10. It's 10:27. I think that says it all. It's typically, we'll at least reach my first target within a few minutes or 10, 15 minutes. We haven't even taken out a swing low on the one. We've respected swing highs, but we have not taken out a swing low. But like I said, I'll wait. Sticking to my plan here. My plan doesn't really entail like it has to take this much time all the time. It's just, it'll be nice if it does. I'm always like kind of journaling how long it takes something. It makes sense if it's a Monday before FOMC for it to take a bit longer and to be a crappier delivery. Will we finally get some sort of break of swing low of a displacement? People, what do you guys think? I mean, after we do that, I'm definitely going to move my stop to the last swing high. And we'll see. And especially if we displace below here, then, stops at break even. This is a swing high. I want to see like an FEG there. If not, then I'm going to still kind of have to play it by swing highs, getting respected. Okay. We broke it. Let's see if we end up leaving a fair value gap. We're below midnight open on NQ. ES is above. ES is weirdly holding pretty decently. We broke a swing low on NQ. I need ES to fall through to the downside in the next couple minutes. Otherwise, I mean, I might even just... There's no FEG there, by the way. We didn't displace. Oh, this is amazing. It's amazing how awful this action is. Right, truly. I hate that we didn't take out that swing low on ES. I really don't like that. If we break like a swing high, that's going to be really weird. At this point, I'm even like debating. No. Sometimes things take a little bit more time, even though you hate how it's delivering. I did say I wanted to take this out pretty quickly and cleanly with all these stacked lows. It's really not. It's really not. Took out this swing low, wicked below it. Need to see some more fall through to the downside soon. Like just so wildly weird here. Like seriously, guys, if we end up wicking this, I'm gonna take the profit there. I've been up like 20 something points. I mean, that's decent, but don't really like that. We broke this, no displacement, so I'm not really changing this. Really don't love this. I mean, we could literally retrace again. So weird that ES is not. It's like, you know, with the stick, it's like, come on, do something, right? You know, like the meme, come on, do something. Come on, let's see the flush here. I give this like 3 more minutes to start flushing. Look at ES, it's really not doing anything. It's crazy. Okay. Come on, let's see the follow through. I don't want this wick nonsense. See follow through. Maybe if I bully on Q, it'll start listening to me, right? Oh, you guys, let's see. ES still like not even breaking us. We'll see, maybe now. We're gonna see some follow through. This is so wildly weird. Okay. At this point, I have to protect my trade. I don't think we should retrace, definitely not anymore to here. So this completely filled this imbalance. I know there are people that are probably like, why don't you put your stop at break even? Maybe I will soon, especially if we're starting to displace right now. Okay, let's see us flush here. Would be good. If not, then ew, ES not even doing what I wanted it to. Come on, let's see in the next minute. Okay, we hit this low, new swing low here. We made a displacement actually here, which is good. Let's see this 1 minute close. As long as it closes below this, we have a 1 minute FEG there and a displacement. So I do think I can put my stop at break even now. Especially it's really close to 2R here. We'll see. See how this closes. ES starting to give way. It's kind of incredible. It's like a slow bleed. Yeah, 9 seconds left here, and it's most likely that more likely than not we do create an FEG there, right? 1, 2, 1, yeah. So stops in profit there. We're up 50 points. I do want to see us take out that 9:30 open, 8:30 open. So protecting my profits. I mean, protecting my trade. Stops at break even. Let's see us take out this next swing low 9:30 open, you know? If we kind of wick this area, I've been saying this, if we wick this, then I'm going to take my profits there. That'll be 2R anyway, or around 2R. But I won't be, I've been very patient this whole trade, right? Let it retrace, dig second time and a third time. That's the third drive, right? 1, 2, 3 into this FEG. This third one looked horrible, but what helps me stay chill in this trade, and we'll take a look at it later, is the fact that that 15-minute like huge wick happened. And I was like, yeah, it kind of does, it's fine for it to retrace within the wick. And that's where I did enter the trade. And it's like, yeah, it's okay if it retraces a decent amount into the wick. Anyway, let's pay attention here. We got to pay attention here, get ready to potentially, we'll see here. What's this reaction like? Ew. See in the next 37 seconds. He has not barely following through there. Literally, like I've been saying, if we kind of just wick that, I'm gonna get out. Mm-mm. Mm-mm-mm-mm. Look at that. That's barely any follow through from ES. Really weird. Let's see how this candle closes. No, I said if we wicked it, I'm out there. Taking the W there, you guys. Freaking, I wanted a quick flush there, so I'm happy with that trade. Let's see how we ended up doing there, right? Trade review. You got to take what you can get on the market that really just feels like pulling teeth out. So entered here, closed here, 28. So pretty decent trade. Not bad considering the range we're dealing with. And I'm happy with how I traded that right now. I took 47-point win. And look at that surge back up higher. I'm happy with how I managed that a lot. You can really see ES here. Also, it's, I mean, I was talking about this. If we could wick this, I'm out, and that's basically what happened. So follow the plan to a T there. I'm happy. Yeah, stayed calm on this pullback. Stayed patient, super patient, you guys. This is a wild for 47 point 40 what 47-point trade. It took us how long? A long time, 28 minutes. So I'm really happy considering the range there, and look at that surge back up higher. Good decisions all around. ES surging up. It would be, I really would not be surprised if ES kind of takes a swing high here. And it's really just going to show back and forth action. So yeah, considering got 47 points from that range, from this swing high to swing low, the range is like 104 points. I'm pretty happy with that. And the morning range here on NASDAQ is 126 points about. That's kind of hilarious. So nailed like a third of the day, and look at where we are now. I mean, that was a good, really good close. Look, really good trade management, I would say. So I'm happy. Very tough hold, and very good. Like I knew when to not be patient anymore, because I just saw all those points of interest here that I wanted us to flush through, right? We had swing lows, we had 9:30 open, 8:30 open, and I figured, if we didn't, then we're wicking and retracing back into the range, right? And that's, and this is a sensitive area then, because there's so many different things kind of here. And it's not worth it to hold anymore, right? So took my money there. W in the chat. This is a hard market here, dude. I'm pretty happy with this because, I mean, look at this action here. ES now taking out that high of day. We took the temperature of the morning here. I said, this is already ugly before even the 10 a.m. news, right? And we were back and forth, not a lot of movement, not a lot of follow through. And then, the good part of why this ended up being a good trade is that waited for that manipulation, that level point of interest, which was a session high. And then I entered after a 1-minute market structure shift. And so then, we finally did end up taking this low. And then that's like a decent trade out of there. So pretty good. Can't complain about this. Like I wanted, if it did flush and take all that out, it would have been a huge trade, but it didn't. So I ended up taking small profit there, but good anyway. Can't complain about 48 points, 47 points, 935 bucks there on 1 minute. Pretty good. And I don't think I could have managed that better really. So I didn't chase, and this. So let me know if you have any type of question in the chat there. I will take a look at chat for why not for the last 20 minutes day. Here we have, look at this now. ES is taking out that high. It's kind of crazy. This is like very much low probability environment there. Someone said they like my blue blockers, great for trading. Thank you. I do love them. Though it's a strong filter, these glasses, they do make everything yellow, but your eyes adjust really quickly. So it doesn't really look yellow to me anymore. It looks the same. And I love it because it gets rid of my eye strain. Leo said, nice exit, helped me save my trade. Oh, cool. Chill. Yeah, I'm happy with the exit. And you saw it all here live, folks. Hit the like button. 1,700 people watched that. Someone asked me, would I flip to longs now? Ugh, that is a very difficult thing to do. Flipping bias like that. I'll take a look, but not really, because I got a W there, even though if I might have been wrong on the overall direction, I took a win. So it's just good. I don't know if I'd take a long there or a short there because, oh man, right here, 5 minute, because of the retracement into the 4 hour, right? Let me take this again on ES there. Where was I talking about here on the 4 hour there? Sorry. Retracement to here. The thing is, we took out London high, so that's why I wouldn't really take out. It's like, do you think this jagged high is going to get taken out next on the 4 hour or the 1 hour? I don't really love that. So, and this is from Friday where I got stop break even. All right, then this is the daily. The daily here. Fair value gap. The thing is, yeah, if I'm going long, right? And I mean, even the long side was very high resistance. No, because I think even Anthony was talking about this, like choose one side of the market you want to trade and like don't really stress about it otherwise, right? So remove that. Gotta remove this. But the range of the day is 124 points, dude. And that's like you're longing near the high of the range. That's not the kind of, no. That's not where I would want to do that with. I came into this market today, right, slightly bearish. If I was bullish, then I would have already taken some trade earlier, I came in today pretty bearish. You can look at the pre-market analysis. I'm gonna go back to the 2 minute here. This is also why I think I was also watching the 2 minute, you guys. I didn't love that there was bearish FEG here, bullish one here. And this is a 15-minute FEG. It's like just too many points of interest, and PDRA is kind of bouncing around. We ended up taking that swing low within it. Then we took out this next swing low. And I mean, yeah, at that point, I did put my stop to break even. We started taking this out. So if I wasn't so good at my trade management, like I was pretty strict there because the thing is we took so long to get there. What was I just saying? It took so long to get there. That was part of it. And then also I was taking into account that ES was looking stronger, and I was thinking this might be a seek and destroy environment or high resistance environment where you take out a low, take out a high, take out a low, then take out the high, then take out a high, take out a low here, then can take out a high again, which is we did here. I think that was key there with ES looking stronger, and I kind of said that in my pre-market analysis, right? You can, if you want, a lot of people ask me, how do I get my daily bias and plan for the day? I mean, if you just look at NinjaTrader, I go Monday to Thursday, for 15 minutes, I talk about my outlook, pre-market outlook, and that's essentially how I'm finding my bias from start to finish, right? I come here pretty much with a clean chart. And I was saying, ES has been the weaker one, and it hasn't taken that April 2nd high. NQ did. NQ even retraced up into this daily fair value gap. And so then if ES has been weaker, and then if I think that this should hold, like we shouldn't take out this high, then why would ES, it's a red flag to me if ES starts looking stronger. Then to me, that just means, we're rotating into, money is flowing into ES to make it eventually take out this high. And then that obviously then invalidates my bearish stance. And someone asked, like, why was I bearish if 4 hour is bullish? Yeah, that's a great point. They're talking about how, yeah, great question, I would say. We took out a swing high. We took out a swing high there. Let me put on NQ because I'm sure some people just want me to do NQ there. Right, some people would be like, we took out a swing high with a displacement. This is a 4 hour fair value gap. That's why I wasn't really taking, overstaying my welcome for sure, but that's what I'm talking about. Is I looked at the daily and I figured that this could be a place that we reject from. I looked at this daily fair value gap and the fact that I talked about this earlier, ES took this April 2nd high. I mean, NQ took out this April 2nd high, ES didn't. That's a potential divergence at the start. Like I always talk about, it's a potential reversal area, but you need more confirmation on the higher time frames then. Sure, and 4 hour didn't confirm yet, but that's why I'm like, okay, it could potentially, especially if you have all these up days in a row, and other structure followed suit, then maybe on this one, on the smaller time frame, you can find something. But that's why I was like, okay, we could find some shorts. I mean, this is where if I was long from down here, I would start putting some hedge shorts. If you look at the weekly, we're still bearish. You could argue we're bullish on the 4 hour, but on the weekly we're bearish still. Right? I don't see a swing high taken on the weekly with a displacement. Someone asked, they're new to futures, what's a displacement? It's when it's an energetic push up. So I typically call that also a fair value gap, FEG or Basir Sibi, just an imbalance. So displacement just means I want to see like that candle be energetic to whichever side I'm looking at. So I'd want to close and like a displacement. So this was a displacement here, this 1 minute here. And clearly this got invalidated and then we started to the upside. So because we're having a lot of back and forth action. Let's see here, but that's why I tried shorts today. Overall, very difficult. We're all in this together. Look at this hourly, on NASDAQ. And on 15-minute, you can see that these are some wild wicks. I said, you guys, wicks be wicking. And okay, so this is what I was talking about earlier, actually. That I was like I was pretty chill with this retracement here because of the fact that this is a 15-minute. We took out this London high. We had a wick, but it was a very large one. And so that's why I made sure to take the fib of this and, made sure to enter in a fair value gap in a premium, which just means over 50%. So that's why I entered here. Because I figured that if we make a large wick that takes out some buy side, a lot of times we'll retrace into it. And that's what we ended up doing there. So got a good win there, especially considering this range bound day on the 1 minute, very rangy. And it's kind of like a red flag to me that look at ES has, made a new high on the session a while ago. And NQ is struggling. She's on the struggle bus. This is low probability environment. That's why someone asked me if I would flip to longs. That's why no, because I don't really see I don't see a point of interest really that I'd long to. If anything, I'd be looking for more. I would look for confirmation on some shorts. But happy with today. We have FOMC coming up. What's tomorrow? Tuesday. Do we have tomorrow? What kind of news we got, you guys? Let's see. Today was ISM. No, we got nothing. No red folder tomorrow. RIP. So it's just FOMC on Wednesday at 2 p.m. So next red folder news on USD. Okay. So, I think today is a really good example of how you could recognize its low probability environment and then kind of put in a lot of just being careful on the entry then, just putting a lot of emphasis on, okay, I wanted to see after 10 a.m. news because of the fact that I was watching here, ES was taking this low, made a new low, while NQ is making a new high, and that's just foo-foo, that's some garbage, right? And then it's kind of crazy how, ES was then the weaker sister to start, but after the 10 a.m. news, look, NQ ended up taking out this little low here. That's why I was kind of quick to take this off the table also. NQ is already taking out this like 953 low. ES really, really, really not giving way, not even for this 1008 low here. We wicked this 930 open and we wicked this low. I was like, all right, I'm out. And you could see it was a good decision because, right, we just pulled back into the range. ES made a new high. So this is exactly what I could call a low probability environment where you have divergences on both sides. So you could frame both sides in the market at different points of the day here. So it's best to wait for some session highs, a better type of point of interest. That's why I said I wouldn't want to look at the 1 minute as a point of interest, right? Too much. Because of that reason. It's just going to be a higher probability then. So all in all, really, really, dude, you can just see from here a lot of back and forth. Congrats if you're green today. I ended up green. I'm happy with my execution. According to my strategy, like A+. I couldn't have done that better. Just reviewing after, at the end of the session, I kind of like to think about, was it a win or a loss? And if it was a win, was it according to the plan? If it was a loss, was it according to the plan? As long as you followed the plan, it's a good day. So followed it to the T. It's kind of crazy that I got out there where it reversed. ES showing some more strength here. That's quite a big candle there at 10:55. So yeah, we'll see into the London close if we end up reaching back up into this 4 hour. I mean, we have now like a busy, right? I mean, it's just a lot of jagged highs here. So I don't really have a bias right now. And ES is stronger and Q's weaker. It's kind of weird. Don't like it. YM's the strongest, it looks like, actually. Pretty good. So yeah, leave a like button. I'm here on Mondays from 9 to 11. And on Tuesday, Wednesday, Thursday, I do 9 to 9:15 pre-market analysis. And yeah, it's been a good day, you guys. I mean, this is where warriors are forged, you guys, because even if you took a loss today, even if you didn't take a trade today, you building that screen time experience, that's important, okay? And you're building that experience up. Yeah, this is one of the harder environments to trade in because there's no trend, really. There's no trend for the first hour of the day. There were a lot of back and forth. I anticipated 10 a.m. news to potentially be the manipulation because of that reaction at that London high. Rejection, break of a low. I just took the retracement. It's pretty simple, And it's just about staying with it. And yeah, I'm pretty happy because I anticipated, this is the kind of environment that if you chase and you choke your stop too much, you could get stopped out. And that kind of actually even happened to me recently. So it's all about at the end of the session, so I've journaled that and figured that out. Okay, and make sure next time when I recognize it's this kind of environment that we don't do that and we enter at the 50% at least. So, and have the stop at the swing high. Because you could see it did dilly-dally for a long time, retraced again, but it never stopped me out, and it went to that first target minimal sell side area, and that was it. We bailed because of that reaction there. I'm pretty happy.
It's a great job today, Tanya.
Thank you, Jim. Appreciate it. Yeah, it's a pretty rough environment. So I'm happy. Like I said, this is where warriors are forged when you're watching price action like this and trading it.
Well, I loved it when you said, even if you don't get a trade in today, you have screen time experience. And, I like to call it muscle memory, but that is so true. That screen time experience where it's boring, I know, and it's hard sometimes, but it's worth every second.
Oh yeah, 100%. I agree with that because there's going to be other times like this, and now you'll be collecting that experience to be better equipped in the future. You gotta gain those experience points.
Yeah, no, for sure. But I am on the struggle bus awful lot also, just so you know.
Yeah. I mean, the indices were on the struggle bus this morning. I mean, then NASDAQ finally, I think we just took out new high of day, but you could see how much it lagged from ES there. It was 10:58, NASDAQ took new high of day, while ES took that almost 20 minutes ago at 10:40. So overall, pretty good Monday. I'm happy. Yeah.
Yeah. And not only that, we have Stowe with us. Stowe, good morning.
Yeah, hey, nice to meet you, Tanya, by the way. Great short. That was really nice.
Thank you. Nice to meet you, Stowe.
Yeah, nice to meet you too. I didn't have a single clue what to get into this morning. The tape was on NQ was so weird, and like you said, that was a wild divergence. And I opened up the Dow chart, and that thing is flying right now. So,
I know.
So I don't know what everybody's up to with the Monday, but yeah, we'll try to trade it.
Yeah, good luck.
Awesome. Well, Tanya, thanks again, man. That was awesome. Appreciate you for sure. Happy Cinco de Mayo to you.
Oh, yeah.
Oh, nice. I didn't even think of that.
That reminded me. Woo.
It might be margarita time early in New York. You never know.
No. Margarita Monday.
I like that. That's great.
Oh man. Anyway, all right. Tanya, thanks much. Appreciate you. See you when we see you again. We'll see you tomorrow.
Yeah, I'll see you tomorrow at 9.
Very
Sweet.
awesome.
Nice to meet you.
Nice. Good luck. Good trading.
Thank you.
Stowe is in the house. Stowe, hopefully you had a nice, relaxing weekend and you're ready to go today.
I did have a nice weekend. It was really nice. How about you?
I did. Me and Mrs. Kaggs went downtown Charleston, found a nice kind of restaurant bar to have some dinner and watch the Kentucky Derby. It was a lot of fun.
Oh, wonderful. That's awesome. Did you win any money?
I got my butt kicked.
All right, fair enough. The ponies do that, right?
I should have had some more. I should have put some stop losses in there, but I just couldn't help it.
Oh, that's funny. Yeah, it rained all weekend here, so I didn't even have to cut the grass. I just chilled. It was nice.
Awesome. Very, very awesome. All right. Looks like you're in a trade. You got a trade cooking right now?
I do. Yeah, I don't yeah, so today was that double news day that I kind of avoid just so I don't get wiggled around too much in the morning.
Yeah.
9:45. What was it? Were they both PMIs, I think?
Yeah, well, one ISM PMI. Yeah, I mean it's two different organizations that release the numbers, but
Okay.
yeah, they're all about services, right?
Yes. Okay. Yeah, and that tape was extremely violent. Not even in the news. So it just seemed like really jittery and really confused. So I didn't take anything until I didn't even take this A plus or a mid trade. Leo's gonna be mad that I'm not long right here. Um, but once we got into it, I decided to get on board. So we'll see what we can make of this.
All right, all right, all right. Well, good luck, and I will be behind the scenes watching every tick.
Awesome. Thanks, man.
All right, you good luck.
Thanks. What's up, everybody? Good morning. Yeah, that opening tape was very weird for a minute, for sure. Yeah, and with the divergence in ES and Q, also I was being extra cautious. Yeah. So right now, yeah, we'll just talk about the trade that I'm in. Right now, we're kind of holding up here in this +1 standard deviation. So I decided to take this long here. Con is short. Good. So I'd like to see the weekly open get retested if possible. But I only got in this with 2 micros as well because I'm really on the fence with what this tape is doing. Morning, Tony. What's up, Deli? How's it going? But we got our IB break here. NQ did not break its overnight low while ES tapped it. Yeah, so this is still untouched. Yeah, just really trying to put this day into perspective for myself. Sorry if it sounds like I'm a little confused, but that's how I'm feeling. We're doing a lot of business up here at the IB now. This was a lot right here where I got in. This was a lot of absorption that eventually got pushed through. So these buyers are currently winning this battle. Yeah, this is my ultimate target up here at 180. I'll ask Jim to run this stat later, but there is a weekly open touch on a Monday stat that exists. I don't remember the specifics on it. I try not to think about it, but yeah, anyways, sorry. Let's go back. Go to the overnight while we're letting this trade cook. So here we are. Here is our 3 a.m. open, Eastern open, which is what I like to look at for the Europe session. And they were primarily short. That's what I see when I look at this here. This is their 30-second opening range. Or I actually changed it to 1 minute. Just helps my chart calculate a little better. Yeah, primarily short. Shorts being rewarded and then consolidating down here overnight, which is right where we opened. So it wasn't any surprise to me that all of these touches of this Europe zone got sold until it became a long. And then that's where the point of control ends up being today. So I don't know if this is going to be, if they're setting up for a balance day. Yeah, I don't really have a good read. So that's why I'm half sized. I have one trade in my mind right now, and that is to try to ride this. If this is going to be a trend into the Europe close to get up back to this weekly open, we'll try to capture that. I got long here at about 80, 082. And then I took mine off there for 94. So We've got a free trade here. Yeah, see, look at this. Tape bomb city. I know something is going on. Something is being extremely weird. It's going from nothing to violence back to nothing again. But I mean, we came back down and retested these highs here with this wick, whatever this news is. It wasn't even, I mean, it was 5 minutes after the turn, so it's not even news. Maybe it's just a tweet. Yeah. Yeah, I don't know. I like that we're kind of building this new node up here. Came back and tested this absorption that got pushed through with that. So I'm still into this idea as long as we're above this. But if we start to rotate back down, I'm going to give it up. I wait for a lower entry down here. I think that's going to be my plan. Yeah. I don't know. How's everybody else doing? Good morning, Leo. Good morning, Trader Slava. Weekly open test is 100% probability if I'm not in the trade and 15% if I am. Leo, do you remember if we ran stats on that or not? I think we did. As far as it being a pivot on the week, though, it's not great that it's all the way up there. And we basically sold, if we go back into the total overnight session, I mean, you can look at this. It was just, I traded this last night. I like to trade Globex. I was watching Nick anyways, too, so figure might as well get in there. But this trend was extreme. Extreme. It was just all selling. So it's, yeah. So it's medium term bearish. But I'm bullish at the moment on trying to get this weekly open retest. Yeah, Mondays are high. I don't remember the specific number either. I'll ask Jim if he can run that for me, maybe for this afternoon. What a great OR mid trade though. Beautiful. So I guess this is a good time to talk about this. So if you look at the overnight session, it looks extremely bearish. All it did was sell all night. So you can come into the day with that bias and be incorrect for the price action that's happening in front of you. Because the New York session is completely different. We opened down here. And for the most part, the open right here served as support the whole time. So buyers were down here. They bought again a third time. And then this was some pretty intense selling here into 1030. And then the RTH open served as really good support. And we're bounced right off that. So on the day, this is showing signs of, that longs are a good idea. So it's always important to have that ability to pivot. And that's a good example of how you can see it. That's a good pivot. So right now I'm just working on this singular idea. I'd love to get a little absorption right here and be able to add. Let me see if I can get in here. I just need the bid to stack a little bit. Get a little happier. Okay. Added one there. And I'm going to have to manually take these off. Okay, cool. So we saw absorption. We saw some support. Just leaning on this LVN. So this bid delta came in here on this sell. So now we're just trying to scalp 10 points there. We'll sell another one there. So I got 3 on total now. And as always, if we add, we treat that as a new trade. So dragging that stop loss up. I mean, we'll see, Don. It's very early. It could still sell all the way back down and get back into this distribution. I'm not sold on this trend. It's very sneaky, and also it's been some violent selling. So yeah. There's a bid still there. Yep. See, got a couple sweeps coming in. Just need to get to the other side of this node. Yeah, I don't know if this is just more absorption up here at the high. It's going to be that back and forth again. Yep, going to get me here. Today's also a really good day. Like Tanya said, there, I got stopped. Like Tanya said about YM, NQ, and ES, I'll share this theory again with you that I have about that. So hold on, might need to get back in. Okay, just got back in. Try one more time up here. The bid is still very happy. Not a great fill. I was trying to get in here at 88. I got 93. Yeah. So my theory about ES, NQ, and YM, and the reason why I watch YM at all is it's a really good barometer for if ES and NQ are not on the same page. You can usually look at YM and see why. I don't have that YM chart on NinjaTrader anymore because I try to keep this as lean as possible, just from a performance standpoint. But YM is mooning. YM is flying for some reason. And, I have no idea why. Maybe Tracy can tell me what some of that news meant to YM today. But just the ISM manufacturing readings and stuff. But if ES and NQ are not on the same page, you can usually look to YM. And if all 3 indices are on the same page, you have a much greater likelihood of catching an actual trend that day. But if they're just chopping around, they're going to be fighting all day with each other. That's another reason I'm not super sold on this trend up, going to get the weekly open. I'm finally going to push it down here. Let's see. I got a new soda water today. I'm out of my polars. I had to switch to Topo Chico, and it's not the same. It is not the same. Yeah, you see that? You see that big jump? Still doing it. Still stacking up right there. Watch that number. Let's see. We have 15 minutes till the turn. Ah. Yep, I'm watching that 90. I might get out if that absorption wins. Might even flip. Yep, watch that number. So this is a tiny fight right here. Did an offer. Okay, you see our sweeps coming in. That's a good sign. Let's see if they can hold it. More sweeps. So all this absorption here at this 88.90 spot, and then you see the sweeps coming in above. That's kind of what you're looking for if you're long right there, just to see some continuation. I'm still, again, still not sold on it. not a super big fan of being in this trade right now, but it's our it's what we got, so we're gonna work with it. Yeah, quite the little fight right here. Oh, you're welcome, Kenshin. I don't feel very comfortable in this narration today because I don't necessarily have a great read on this tape, but we are trying to make something happen with this long. Services PM. Tracy, thank you. Okay, let's read what Tracy has to say. Services PMI, not manufacturing. Okay, great. Indicating a stronger economy as far as the consumer is concerned. Okay, services employment was also higher, thus the service sector still remained resilient. Awesome. Thank you, Tracy. Thank you so much. Yeah, it's just still stuck here at this 90 guy now. Making this new node, and I'm not in love with it. Let's see. I like this change in tape here. This is how we use Delta Map for some clues. So you can see here the medium buying. This is pretty intense selling, and then down here we flipped more neutral, and then now this is a white hot bid candle. So that's also a good sign. All right, we got one off. I'm going to take those two, so this is free. Try to just tap this IB if we can. Let's see, 93.03. We'll try to get 13 on that one. Just got to clear this absorption up here. Yeah. Also, a reminder that we're tracking our stats today. We're going to track our stats all week, and then I'm going to go over all stats 1 week at a time. That way we're not too zoomed in. And man, yeah. I don't know. Maybe Con's right. Maybe this is a short. Range is 133 points. That's a range for ants. Come on, baby. Pull it. Woo! I knew that bid was cooking around in there. I knew it. Sneaky tape. Con, where's your stop? Let me know. Maybe me and Con can do some friendly fire. It's tough trading by myself without my buddies. But no, Con took most off the short. That's cool. So yeah, if we can hold above the IB, I'd really like to see us get back up in there. Let me see. And this is so. I'm looking for secondary targets. Obviously, our first target is the weekly open, but you know, I've got half my trade on right now. I'd like to take some of that off. So what I do, you know, is just come back through and try to find areas of interest that, you know, occurred overnight. This is, you know, this is like, this was that big sell. So here was a spot. I remember this 30s. This is also why I like to at least watch Globex, because you can remember some order flow for the next day and use those spots as targets. This was a big bid here. Yeah. But, I mean, we made a new high on the day. That's good. Yeah, this action is really rough. Thanks, Tanya. Yeah, I'm happy with that. It's not a comfortable trade, but we pulled it off. $22. See, this was an exhaustive bubble up there. Now we're fighting with IB. Let me zoom in so you folks can see that. Yeah, tape's still fine. 5 minutes to the Europe close. The book's getting a little more liquid right now, which is nice. It was so erratic and jumpy this morning. I couldn't figure out why. Like this, yeah. If you go back and watch the DOM or watch the tape at all, during this sequence, I'm sorry, not that one. This one, and this was not news. This was just violent selling back down into the open. One standard deviation of IB is my target. Okay. So that's what you like. Yeah, there's lots of different stuff like that. I'm probably going to take one. Actually, my target is 34.50 with my math. Or I'll just get out if this is going to sell back below the IB. But they're stacking the bid a little bit now. It's not going to go up in a straight line, so it's important to keep that context in mind. Like, why you got into the trade? Is it invalid? Do you need to mess with it? Do you not need to mess with it? What invalidates the trade? That's all stuff that I think about and go over while in a trade, just so I don't. Yep. See, we see this bid delta coming in here. Let's see how we do. Just trying to watch this for reaction. Okay, I added 2, 96. And I will cut if this pukes below this candle here. Pretty big push. There's also been this weird thing on the DOM today, this order chasing that's been going on, and I don't know, I don't know what program that is, but it's really annoying when you spot a computer program and you watch it do its trades. I think Leo and I on last Thursday watched the scalping program scalp 15 points for itself, which was pretty funny. Yep. So we're just fighting with this to stay in this deviation here. Came down, check. These buyers were still there. Three minutes to the close. The ghost of Jim Simmons. R.I.P. Jim Simmons. That's a great book if you've never read or listened to it. Just the story of how Jim Simmons built. I think it's like it's definitely not an authorized biography, but it was somebody that went through and interviewed a lot of his colleagues, and there's a lot of really cool Jim Simmons stories in there. That guy's a trip. Yeah. Need some initiation here, bid. I need somebody to cross the spread. Doesn't have to be, I don't need a hero. I just need a regular, normal computer program to cross the spread for me here at the Europe close. Otherwise, I'm going to have to get out of this trade. So we're losing this VWAP band here. We're losing our trend. So there might be a better entry for us lower. We'll find out in a second. Ooh, there's some bid. Cross the spread. Do it, boys. What we want is life beyond Thunderdome. That's fair. It does feel a little bit like Bartertown today. Who runs Bartertown? Man, I watched that movie when I was a kid, like a little kid. That scared the crap out of me. Mad Max is a weird show for a kid to watch. That's not. I don't think I would let my kid just jump right into Mad Max, but for some reason that was perfectly fine for me to watch when I was a kid. Yeah, this is this. Yeah, it's that 95. That program is so strange. Mad Max was the manual for us back then. It kind of was. I mean, in the 90s, you just kind of went outside and stayed there until the porch light came on. It was a good way to live, man. That was awesome. Build, at forts. The one thing that got me in trouble, I grew up like northern Pennsylvania, in the boondocks, and we had the Allegheny River in our backyard, pretty much just a couple blocks away. And I had a really good plan. I was going to build a raft and float to Pittsburgh. So I started to do that. That was the most trouble I've ever gotten in. And now we went through another cycle of this tape too. You can see there was some pretty big selling, and then the delta map colors cool off, and now we're into like some neutralish buying. Still not in love with this. Yeah, they're selling. It's just like, yeah, we lost the turn. I don't know what this I don't know what this chasing program is trying to accomplish. Ah, gross. Yeah, it's feeling pretty heavy, Con. I agree. That was a lot of dumb stuff to put in up here. Yeah, price just stalling. I don't really like this. There's a bunch on the offer here. We'll see if they get filled or if they're going to push down. Trying to watch. Bid stepping in. They pulled. Offer pulled. Trying to stack the bid side. It's just this 88.90 guy again. Yep, back and forth, back and forth. 88.90, getting filled, getting filled. Hanging on this ledge, which is not awesome. And they just put the point of control there. Also not great. Yeah. That's nice. It's always good when you get stopped at a price that is splashed lower than your actual actually traded. That was a very nasty sell. That's fine. We'll wait. This is I mean, they haven't run that. There it goes. Okay. Let's see if this LVN here holds. Let's scale back. I'm going to scale down to 2 here. Yeah. What's the meaning behind your candle colors? Looks like red is both up and down. Yeah. So these are not colored based on where the candle closes. So red is both up and down. Blue is both up and down. So these are all colored depending on the dominance of the delta that is inside of that specific candle. So these candles are 750 vol candles. meaning volume. And this is part of the Delta Map study that's part of the Order Flow Labs suite of tools. Yeah, they need to lose the mid. It has been holding for an hour. I agree. Tony, no, it's not a free Delta indicator, but you can subscribe on the Order Flow Labs website. It's not just this one indicator, it's a ton of them. Yep. I think now we're just chilling. We took our shots up there. I was happy with this. Where'd my mouse go? There we go. It looked great for a second. This might be something that I got to get back into at noon. I'll watch it to come back and test this this spot here. This is our, lack of a better word, Europe pivot. It's also this was a bunch of previous resistance up here too. So yeah, that's a weird looking profile. I wonder if this just becomes a nice balanced day down here. It's pretty aggressive now. I'd like to get that guy stop right there, at least. Can't believe I'm looking at a 138 point range right now. I feel like it's been a very long time since that happened. Oh, I watch both, Alex. I've got the you can't see it, it's right here. This is the 24-hour VWAP, and then this is the RTH. I put the bands on the RTH one. Just for NQ, just because I find that it's more responsive. But some days, if the overnight session has been specifically large, like if it's an abnormally wide session, then I'll watch those too. What is this doing? Yeah, we got this too. Oh yeah, Lunatismic. Huh, I got that name. It's sometimes it's a challenge to read everybody's YouTube names. Make sure I'm not about to say something bad. This is +1 and +2. So anything in this band is +1 to +2, -1, -2. And then this green line here is the actual, there, I see. That buyer was pretty serious right there still. Yeah, we might have to take another shot. This is our Delta flip, which is good. Can't get back in that band though. That seller is still there for now. I'm going to do that. So I just got in just a half size short here at 87. I mean, I watched that get squeezed right to here. And if it, I'll pull this down here too. If it gets back inside of this deviation band, then I'll be done with that trade. But it feels very heavy. That was a bunch of buying, but it was immediately met with selling up there at the top. Cool. We covered one. Good. So I got in at 87, stop at 99. And then we'll watch what happens down here. Hey, I'm pretty stoked on that. That was cool. That's a challenge for me to switch biases like that. My first inclination off of this candle and this flip was to maybe that our long idea was going to play out, but I was able to see this rejection in real time and hop in, at least get half off for 12 or 15. That's turbo bid again though. We'll see. This 89.90 is a spot. Oh, thanks, bud. Con, do you use a TPO chart? That's cool. I do not. I don't look at a TPO chart. They have never made sense to me, and I've been made fun of plenty for that. This gets back up here and takes this stop, then I'll think about switching again. But what's ES doing? ES also just puttering around in the middle. Also has not got to its weekly open yet. Something I like to think about when I'm in a short is a lesson that I've learned a couple of times, which is not to manage your short trades the same way that you manage your long trades. They are not the same thing. So I'm really watching for this to get invalidated, and I can hop out and just take my 10 points. Use TPO for C poor highs, poor lows. That's cool. I do that too, but mine are just automated. But that's great. Auction market theory is fun and cool. Even if you're not familiar with it, it's worth looking at just to see if it, see if it speaks to you in some way. Yeah, I like that. I'd really like to see. Yeah. All right. Let's see. We might have to flip here. Watch. $11.45. Okay, we got stopped. Seller is still there. Try to chase this one more time. They're stacking up the bid. Just need some sweeps. I need some backup. Unless price is just going to freeze here. It's been painful to try to get a reaction off of this any part of this market. Scratch. Painful. Scott, there is a ton of books about auction market theory. You could read any Dalton books. You could read. There's also a cool website called, I don't know what I'm allowed to say on the thing, but there's a lot of good free resources for auction market theory. Just Google it. Jim Dalton is a famous person that wrote a bunch of stuff about it. So that would be my first recommendation. Con, who do you use? How'd you get into auction market theory? Yeah, no problem, Scott. Maybe somebody in the chat can help you out too. There's a really good free resource site called Trading Riot, where I've learned a lot of stuff. It's a free blog. That's where I initially discovered auction market theory concepts. And then I kind of got into Dalton from there. So I went backwards, which is usually what happens. But I think it's important to know that you can learn all of this stuff for free. These are all, pretty well-worn concepts. You don't need to pay. I mean, you could buy a book and pay an author. That's a good idea, but this isn't something you need to pay for education for. You can earn your way there. Yeah. I'm back waiting for this zone again. Seems like this is getting filled out. You see what I mean with that bid, though? Like, this has been the only spot of responsiveness in this whole sequence is down here. This is the only spot where any sort of, speed is happening in the move. And then it gets up here to this mess. And just stalls. Like, they stop crossing the spread. But this is the middle of nowhere for me. I can't initiate there. It's all this. Yeah. Yeah, I can't take a trade right there. Let's see. Up here at this inflection point again. See if they're finally going to pop it. Need some sweeps. Need some something. See? Gets right there. Stops dead. I don't want to be short with these people, but I might have to be. $11.52. So 10 minutes left until the turn. Now they're going to run it. Yep, I'm going to scratch out of that one. You fooled me many times, Bid. Yeah, this is what I've been seeing the whole day.
So,
Hey, Jim. Sorry, is it time? Get me out of here. Tricky tape.
Yeah, and we're going into lunchtime on the East Coast, and I've never been good at lunchtime trades.
That's sometimes this noon spot is a inflection point.
Yeah.
I don't know. Yeah. Buyers want to press this. I can't believe the responsiveness that this 70 was getting. But every time sellers got down there, either they covered or someone came in and gobbled it all the way back up. I don't know. But
yeah, I don't know either.
we never do, right? That's the point.
I know. The only thing I know is those ISM numbers seem to move yields up.
Oh, okay, that's good to know.
Quite a bit. So that
interesting.
Yeah, both S&P and ISM services. By the way, that report, that ISM Institute of Supply Management, someone told me that survey's been going on for like 100 years, like some crazy long time. I know.
That's cool. Well, that's weird. I wonder what used to be in that like 80 years ago. I should try to find those. That would be awesome.
The buggy whipper.
But
the guy whipping the bug.
Buggy whipper is good. What would it be? Just like bags of grain. I've been watching I was watching a lot of Westerns this winter. So I got big into like the Oregon Trail backstory stuff. I'd never really dug into beyond just playing that PC video game when I was a kid. But that's what that makes me think of.
Yeah, what a rough way to go back then, man.
Yeah.
I hear you.
Well, all right.
Anyway, man, well, when am I going to see you again?
I'll see you tomorrow.
Tomorrow,
double shift tomorrow.
Awesome.
Yep.
Double shift.
Very,
very, very awesome. All right, man. Well, good job today. Appreciate you as usual. Looking forward to talking to you again tomorrow. In the meantime, have a great day.
Thanks, brother. Thanks, chat. I appreciate you folks.
All right. We're going to do a real quick Edge report recap here. A couple things going on that I thought was kind of interesting, particularly in gold. Now, gold caught this bid overnight after the London initial balance. We just rallied like crazy in gold. I mean, there's no ifs, ands, ors, or buts about it. We just boom rallied like crazy right after that London initial balance ended. R1 was holding his resistance a little bit. That 1-day max from Menthor Q, forget about it. R2 rear view mirror call resistance in the background. Jax 9 in the dust. And then we had our U.S.-based initial balance, and we're kind of trading in it, right? We're trading kind of right in that range, And I kind of decided, you know what? Let's look at Edgeful a little bit. We have a little bit of a wick coming out of the bottom of the opening range. And I thought, let's look at some stats. So I went to edgeful.com. Remember, it's only one L in Edgeful. Initial balance breakout by week. This is what I was looking at. And again, I have my initial balance defined as 60 minutes. Based on a 9:30 start. And this is gold, remember. Breakout measures by wick this time, not body of a candle, but by wick. We have a little bit, I mean, barely. We have one wick that went below it. And so it's like, all right, what's the stats? 92% look back. Again, this is a 6-month look back. A single break. In other words, we've already achieved that single break. An 8% chance of a double break, which would mean we'd have to have a wick. Let me tell you what the high is on this candle. 3337 spot 9. We'd have to have a wick above that. And so why is this important to me? Well, going through my mind, my head, I would draw a fib retracement on here and I'd be like, all right, is there going to be a retracement in this market between now and the close? And if there is, do I want to try to take advantage of that by getting short? And if the answer is yes, then I know where my stop's going to be, right? I know where things are going to get hairy if we get that double break, but chances are, anyway, based on this 6-month look back, we won't have that. We won't have that problem. So that's kind of one way to look at it. And I don't know if we're going to have a retracement or not today. FOMC weeks are funny, but this is how you could possibly use these statistics from Edgeful that are pretty powerful. Now, having said that, we do have some targets on the upside, though. We have a blind spot 9. The bigger the number on the blind spots, the less excited I get. And then R3, which is rarely achieved, right? R3 is one of the pivots, 33.46.5. So again, I'm kind of looking for that retracement back down. We'll see if it happens or not. Real quickly, going over to, let's see. Oh, let's go over it. Next, let's go over to the let's go over the Swiss franc, because this is another one I have my eyes on. The Swiss franc is, when I see green on the Swiss franc, green, I get a little worried. I think risk off, right? And I think the whole world thinks risk off when we see that happen. We're in a consolidation range really tightly here in the Swissy, so I'm not too overly concerned. So I popped it up anyway because we do have not a bad move up on it right now. But now we're finally starting to break, right? We're hitting that VWAP here, the session VWAP. And, this is a great currency pair to watch, great currency futures to trade. And again, we'll see if this VWAP holds on the Swiss franc or not. If it doesn't, it could provide some relief. And so why is this important to me? Well, I want to know what equities are doing. And if there is going to be an inverse relationship here from risk on, risk off, then I want to see if the Swiss franc gets the memo before everybody else. So that's what I'm thinking about on that one. Let's shoot over to crude oil. Crude oil right now, we're kind of tight in crude oil. We're right below that session VWAP as well. We do have that one-day min, which I think is a target, but really support is at that S2 level, that pivot level, along with JAX5, just kind of holding support right now. Haven't had a lot of penetration below it. And then on the top side, resistance is certainly at JAX4 right up there. And you got S1 up there, 2 areas of interest that are pretty tight. And that's approximately 57.5. And then you have a really nice point of control up here. I don't know how nice it is, but it is a point of control right around 57.40. So there are some targets on the upside, but we are trading below the midpoint of this dominant candle, this 10 to 10:30 candle. We are trading below it, I don't know, significantly. So again, to get a drive back up there, I want to see that kind of taken out as well. And I mentioned yields really quickly here. Let's just pop them up really quickly here, and then we're going to go to lunch. I am going to find it's on my chart over here. Here we go. So yeah, then 2 years kind of going sideways here. The 10 years gently sloping down. And if you look at a daily chart, you'll see some movement on this. And probably because of those ISM numbers didn't help at all. Right now, we're tracking 4.34, a little higher than I'm comfortable with on that 10-year yield. All right, having said all that, folks, appreciate you guys being here with the morning. Folks in the chat, folks listen, awesome. You guys are making this community awesome as usual. Appreciate you more than you'll ever know. This afternoon, we're coming on 2:30. We're going to be with Nick and Leo. They're going to be trading live on the close, hot commodities with me and Shai. So we will see you at 2:30 East Coast time. Appreciate you being here. See you soon.